2:30. Yeah, let me get out the door. All right, guys, what's going on? Power and Profits, your brother African Emporium. Let me cut this other sound down before it starts echoing. All right, just again, late day action here in terms of opening up the screen. Didn't necessarily have an agenda or plan to do that. I actually was supposed to leave and been out of my home here, around 12. But again, the weather's kind of finicky. Was trying to get out and enjoy a little bit of the so-called wildlife and nature side of things since the hurricane moved, throughout this area, so to speak. But we still have some bands popping up, pop-up storms and stuff like that. So again, I may end up, having this ride out the rest of the day in the stock market, which no big deal in that regard too, because again, we had a great day of trading thus far. For some of you guys who was, in some of the Discord rooms, Twitter, whatnot, or the Facebook group we have, or even stock tweets. I post a few stocks here and there. Again, wasn't that active as I normally would be across all the social medias. Again, having other things to do as well, phone calls, things like that. But outside of that, again, phenomenal day of trading. Two biggest trades out of the gate. So far as starting out the day, I should say, NIO. Great trade. Swung some of that short actually yesterday from 885. Stock got a little action pre-market, spiked up a little bit. Actually, when the bell opens up, got up there even above 9. Went up there and hit some nice little peaks up there. I think roughly around about 920, somewhere around there, 915. I added more shares to it. I didn't close out my position. I was like, I just knew the stock was going to roll over. The momentum had shifted at that point. The stock had ran, obviously, 2 nice solid days. Obviously, after the IPO, actually 3 days to be exact. So we was looking for those red days to kind of come in consecutive ways, same way how the stock was just running. So here we are, a real official red day, obviously outside of that of yesterday. And I think there's still more downside in stock. Stock got down as low as like $7 and change. So my goal target price yesterday, for some of you guys know, I was looking to take it short down into that $7 range. Not no particular number set value. If I just put the Fibonacci bands, I could have given you a discrete number, but my target goal was $7. We got it pretty low yesterday. Again, almost hit it. Then we got some people came in out the hours a little bit. Pre-market started buying the asset up, which is fine. And I think the reason why it spiked today as well was because again, they trying to make it like it's a big thing. Its rival and Tesla did what? It got slammed today by the Department of Justice that they were looking to probe again Elon Musk for that kind of as we know it for what it really was. He was market manipulation when he made that tweet about taking Tesla private for the 420 buyout value or 420 dollar stock private value share value. That it was a little premature for him to do that without putting out the official forms that he needed to do that. Since then, again, Tesla has been all over the place. All right, and it's been trying to find, some footing, because this, one turn of events to the next. CEO get caught smoking weed with Joe Rogan, just on and on. The tweets came back from the scenario that it happened in Thailand about him, the rescue scenario and him making the gay jokes. And again, he can't get out of his own way, so to speak. And so with that, again, when we find these kind of, consecutive waves of bad news or bad press on a company, chances are, any little small spikes in between that kind of, get the stock pumping, it's typically going to still turn over and trend downward to the downside of it if it's bad press. And, again, the inverse if it's going the other way. So again, that's why NIO was spiking up today, because Tesla was dumping. So it was it was like an inverse in ETF. Bad news on one side of the house. Okay, we'll take it, and run the other way with it because we're the competition. But it was just, it wasn't enough to sustain that stock from being up there at that price. And again, I just added to my short, and it worked out beautifully because again, it brought my average up to $9. And here we are, we got the stock down here at the low 8s, trending down the low 8s area, getting ready to probably crack this 7 again, possibly before the market close, which will be awesome because again, y'all know how I trade. I trade multiple different ways, multiple different strategies. I do it all. Again, I don't box myself in, but more importantly, I'm looking for the opportunity. When I see weakness in the market, I see weakness in the asset, I see weakness across a sector, whatever the case, I'm looking to capitalize on that. In a particular news, whatever the case, I'm looking to capitalize on that. And if I can take a position, be a long or short, and be able to ride the meet, to move out, obviously with my level of managed risk, because I've done enough due diligence. And, again, it's a no-brainer in that regard for some of you guys, because you can't trade necessarily, day trade like most of us can. So you got to, rely on taking a trade under the best discipline, due diligence and discipline, and let it, take its course. That's why I believe option trading is just going to be phenomenal for a lot of you guys. That's even if you haven't started trading options. I think it'll be a great way to kind of really get you in the game without having to, expose yourself to so much risk, right? Because the goal is the game, right? The game in terms of what we're doing as traders and investors is to learn how to mitigate your risk as much as possible, to be consistent at getting on base, meaning getting winning trades whenever we can, but maintaining and understanding how to make sure we keep a tight level of risk, management on top of our trading, so we can last. Again, this is a longevity thing. It's a marathon, not a sprint, right? So that's why it's always important that we keep those kind of, covenants and creeds or core competency kind of protocols in play every single day we trade, right? Again, put your sticky notes all around your trading station, excuse me. That way you never break those rules, right? All right, because the first cardinal sin is what? To break the rule. All right, second cardinal sin is to do what? Get emotional after you break the rule, and now you're going to start making a litany of mistakes, right? It runs like, like running water at that point, right? So the goal, again, is to never break rules unless the opportunity in terms of you breaking the rule puts you in a more positive advantage as opposed to a deficit, right? Never average down on junk. Always understand if you are going to average down on any asset, be it short or long, you have a discrete plan in mind, because the asset is showing you the signals that it's going to return to your average point value, or the point where you entered in at, and then obviously take you into the profit value, right? But outside of that, we don't want to advocate averaging down on a bad stock. Obviously, as the saying goes, never put one good tire on 3 bad tires, right? Right? It's just not plausible. All right. So with that being said, guys, thank you for stopping by, hanging out with your brother here for a little moment. I appreciate you guys as always. I see my family, Dale and Muhammad, in the house. Thank you for stopping by today. Over Gordon in the house, always. You already know it. Wakanda family. All right. I see my family, Chose Rod in the house. Thank you for stopping by, family. All right. Good to see you. The beautiful Eva Camille in the house. World-renowned drummer in the house. Thank you for stopping by, Eva, but you already know it. I see my family, Brian Garrett in the house. Thank you for stopping by. Oh, you already know it. Power and profit to you. Right. We see our sister Elise Baker in the house. Thank you for stopping by. As always, you're welcome here. You always welcome him whenever I get a chance to go live. As you can see, since this hurricane been in our area, or the storm, you see it on my face. So I kind of been in the house, around the home front, so to speak, kind of weathering this thing out. But either way, it doesn't stop the show from happening in terms of being able to get after this market. That's why I love what we do as investors and traders, because it gives us the flexibility to live life a little bit on our terms. For those that do it full time, what I'm saying, all right, even if you're doing it part time, swing trading or whatever, quarterly trading, biannual trading, annual trading, whatever, we have such a flexibility to be able to do this thing at a high, maximum level and still benefit from it. That's why I love this stuff, guys. You gotta love it too. I've yet to see people be profitable in the stock market say, wake up one day, so I don't want to do this ever again. It just doesn't make sense. And once you learn how to be, again, profitable at this, because you're following all the necessary steps, you're following all the necessary rules of the game, or, you're understanding the rules of engagement, so to speak, then chances are over time, you're going to get better. You're going to get better. This is not that kind of, again, environment where if you just hang around it for so long, you're not going to get better, unless you're just choosing not to want to be better, right? Because again, the market is always, showing you certain aspects of it where you can learn how to, compartmentalize, categorize it in a certain aspect or a pattern or a trend, and learn how to benefit from it, at some point, especially when that pattern or that trend comes back around again and revisit itself. So again, that's why this stuff is awesome. Why we always say trust the process. Number one thing, trust the process, right? Trust the process. Understand that do what's right by the market, it will do right by you, meaning it's a speculative entity for a reason. It's not an exact science, meaning you need to learn how to adjust and audible along with it, right? If you want to be profitable. Or even in most cases, some days it's just not worth trading, because if you don't see what's necessary for you to trade, if there's nothing necessarily for you to trade, it doesn't fit your criteria or your strategy, then don't trade. You guys got to get in the habit of doing that too. Some days just don't trade. It's not, it's not worth it. You learn more about not trading than you will probably from even taking bad trades or forcing a trade. All right. So again, just want to put that out there. All right. So yeah, I was speaking about the stock, Miss Elise Baker. I was speaking about NIO at the time. But yeah, but GOV again, over Gordon, you're right. GOV again, that was a stock that I had swung short as well because of this bad news. You guys haven't a chance to see the press release on GOV. We swung it yesterday. I actually had 2,000 shares. I ended up covering off 1,000, left 1,000 there to kind of swing until today. Left my average around 1364. And the stock got all the way down, obviously, like in the low 12. Right? Obviously, my goal yesterday was taken to the 12s. Here we are today, it's in the 12s. Again, so a beautiful trend trade in terms of a short side scenario that paid out very well. Right? Even if you bought the options yesterday, again, a great phenomenal trade. That's why I can't wait to really start opening these live streams up, consecutively like I was doing before, so we can really get big at the bringing in the option trading aspect of our trading arsenal, so to speak. Right. So again, getting those Robinhood accounts up and ready. Again, no commission free trading with that when it comes to options. It's not the best on the world to use, but I get it. But again, I'm trying to give people opportunity to show that you can do this thing even from a mobile perspective. If you're on the go, if you're at the job, if you're whatever you're doing, you can still trade the market from an option perspective from your mobile phone. Obviously, Robinhood being one of those platforms that allow that. TOS, no, yeah, you can't do it on TOS yet. I don't think they haven't turned to the mobile aspect of it yet. But you still have to set it early in the AM and then just monitor it on your TOS, throughout the day, right? Oh no, you can. Okay, you can. I'm taking it back. I'm getting them all confused. Right? We trade so many different platforms now, like Webull, etc., etc., etc. So you have to get it acclimated, I think, to your phone. All right, but we'll dig more into it because that's my thing. I want to be able to dig more into this thing so we can be able to again be thorough in knowing what we can and what we can't do. What are our limitations? Right. So again, I do know in moments where we're not comfortable in trading the equity stocks, we still have options available. Right. Today, like I was discussing with one of my brothers, Mr. Maniac. I don't know if he's in, if he's not, but about taking Cracker Barrel. We know Cracker Barrel had earnings, right? A couple stocks had earnings, obviously, in the AM. We had AutoZone, General Mills, obviously, Cracker Barrel, APOG. Those were the four main ones that we were looking at for earnings, right? All of them missed on earnings. Well, what if I told you guys I had every last one of those stocks short in terms of puts or naked short, right? Based upon the due diligence, right? And lo and behold, all of them, tanked today, or they sunk, or dumped, or however you want to, whatever adjective you want to use. They pretty much, the bottom fell out of them, right? So in moments like that, again, you being able to trade them from an options perspective mitigates your risk. You know how much you're willing to lose. By proxy of that, you already kind of set in terms of being able to make this trade in respect to the value where you think it's going to go, and give you the best bang for your buck under the option contract value. All right. So unlike you trading a stock where a common equity stock into earnings, which obviously puts you at more risk because whatever cap you have in your account or that you're trading for that particular asset, it could easily you easily lose it all if you don't put a stop loss on it, or it could be a bigger number of value that you'll be willing to lose because now when you get emotionally invested into a trade, you maybe say, okay, I'm only lose $200. Right, you get to that $200 threshold, and you be like, okay, I think it's going to reverse here, right? And then it goes up a little, it goes against you again, another 20, 30, 40 bucks. You say, okay, it's not that bad. It's only 20, 30, 40 bucks. And then you find yourself, at 60, 80 bucks saying, okay, it's not that bad. It's only additional near 100 bucks here. Okay, I'll cap it out around 300 as opposed to 200. Now you're already down an additional 100 bucks, right? And now you're kind of getting emotionally kind of involved, where if you was trading the options, well, you only have a certain amount that you have, that you can potentially lose. So if a contract costs you, let's say $1, which will be equivalent of 100 bucks from a contract, because we know for every one contract, that's equivalent of 100 shares of a stock, so to speak, any one particular asset. Well, the most you can lose is what? 100 bucks, right? The most you can lose is 100 bucks, right? If the stock goes your way, meaning the stock, if you bought puts and it sells off, or if you buy calls and it spikes up, and especially if you bought in the money, which is already kind of putting you into the green out of the gate, then again, your upside is beautiful, especially if you hit your break even goes, it goes higher. Again, you got all this kind of, quantitative, aggregate money now being pooled into that particular asset, the open interest started to spike up, and that thing gonna turn over real quick. We saw stocks, in the option market just jump literally, from a 30-40 percentile value up to like 150 or 200 some 300% literally in a matter of moments in some cases, 5 or 10 20 30 minutes whatever into the trading when the option interest starts to kick up. And that's phenomenal, again, from that particular. And you can day trade an option, a day trade option the same way you do common stocks, so that's fun too. Again, so my main goal again is to always try to offer up different opportunities and avenues that we can trade this market and not get myopic in a way of retrading, because again, we have to be able to audible. That's just the game, right? If you want to be a well-rounded trader, you have to know how to trade this thing from all angles, best you know how. Again, you don't have to overstress yourself, overcompensate, but again, you still want to be able to learn how to trade this market through any kind of value, right? Pullbacks, spikes, whatever, sideways channels, whatever. So that way you can always find, your piece of the power nugget out of this market day over day, right? So again, just want to put that out there, and we're going to discuss those things as we go along. Hey, thank you for stopping by, Sister Rachel Fry in the house. I see you, Eva. Thank you for stopping by today. I'm honored. All right, my family, Benny Rodriguez in the house. As always, thank you, family. You already know it. You already know it, family. I'm honored. I'm humbled by that. I see my family CG3 didn't pop through. Thank you for stopping by today, family. You already know. You already know, family. All right, so what is the question? What habit is, what platform do you trade on for buying, selling, shorting stock? I use TradeNet for the most part as of late, a lot lately. But I do have a link down in my description box for some of you guys may have seen my TradeNet platform. Probably ask, what is this platform that I'm trading on? On average, I use that for shorting because I get the buying power. Right? They give you a phenomenal leverage. Again, when we talk about leverage, margin, so to speak, they're the top dog on the block. There's no one giving you that kind of buying power that they have. Now they have some little things that they're still working on to build up their platform and get better. Especially here, it's probably garnering more U.S. based customers. But again, when it comes to execution, buying power, I mean, there's none out there better than trading it in those intervals, hands down. Just keep it 100, right? They are the creme of the creme when it comes to that. Again, they do have issues like other platforms do, and TradeNet and TOS and TD Ameritrade and E-Trade like everybody else. But again, execution, no problem. No slippage when it comes to getting out of a trade, be it short and also going long. No slippage at all. You obviously get slippage over that Sure Trader and some of the other Speed Trader, Light Trader. Again, I get it, but again, it all depends on what's comfortable for you. I like to trade because I like the buying power. I like the opportunity to trade these bigger stocks like your Amazons and your Googles and Teslas and all these big, Facebooks, and not have to worry about, again, having the issue with buying power, especially if the stock is going my way. Obviously, like Tesla today, Tesla's selling off, right? It's sold off today, right? Still dumping possibly right now if I go check right now. But again, you could trade that stock with a higher buying power threshold, comes with more risk value, but you got to know what you're doing, right? So again, that's why I love it. But yeah, check my description box. I have a few links down there. TradeNet is one of them. Obviously, I get a discount, value I get to offer to you guys if you do sign up under my link per se. Whatever, I'll explain it in more detail if you ever ask me. Again, I'm not going to spend my whole time talking about TradeNet. Again, I like them. I like what they're doing over there. But I'm here for you guys. If you got questions about it, hit me up. We can talk about it. I can break it down to the science in terms of everything that they offer, the whole parameters around them, the different packages that they offer, in terms of the buying power or whatever the case like that, right? And then we can kind of go from there. All right. Yeah, it actually trading is CFDs, right? Contract for differences. That's basically what it is, right? So it's basically like you're a contractor trader. Family spiritual trader. I'm Rod in the house. Thank you for stopping by today, San. I see you in the house. I see my Oba LaFool in the house. Thank you for stopping by. Uhuru family. You already know it, right? That's trading it. And I'm gonna share my screen here in a second anyway too, because I am gonna try to get out of here for like a second. See how the weather holds up right now. It's sprinkling. But I'm jonesing, so to speak, right? I've been locked up in the house for quite a while with the storm, right? And I really want to go do the things that I like to do, other than that. So I may go kayaking for about an hour, nothing major. Take my little wet weather gear with me, whatever, get me some laps in, maybe row about an hour. About a mile out on the lake and come back. But whatever, again, that's the African, I guess. I love the nature. I love nature. But yeah, that's trading. So basically, contract for differences are basically what they are. You're trading pretty much like a contract trader for a particular investment firm or a hedge firm or whatever the case you want to call it. So by proxy of that, they're allocating you obviously capital or revenue to trade with. You're trading with their money basically, right? And then for whatever value that you're buying into the package with as a partnership, so to speak, as a contracted person, you get what they call a revenue split, right? So for trading that, again, they have of an intro package, they'll give you like a 70-30 split, right? 70% of whatever you make, you keep within a month's aspect or a month time frame, and then obviously you pay them 30% of your gains. But they're gonna give you $14,000 buying power, and you only have to pay $500, right? So your $500 gives you a $14,000 worth of buying power, right? So you can trade bigger stocks now. You can trade these stocks that are somewhat mid cap, small cap, even some kind of large cap stocks, and you can actually maximize your opportunity to get a little bit more more meat of a move because you got a bigger buying power. Again, it doesn't mean that you negate all your habits of good trading and discipline and risk management and things of that nature. It just says that now you can actually eat a little bit more off that asset in this movement because you got a bigger buying power value you can get. It's supposed to buy 1,000 shares. Now you can buy probably 2,000 or 3,000 shares for a stock you might have been trading, pretty much on your Robinhood or whatever else at a lower multiple value, right? So, I mean, again, that's just the aspect of having a good margin account and learning how to utilize it properly. All right. So again, but we're going to get dig into those kind of things as this time progresses, in terms of as we start doing more live streams, me and myself. Again, when I come back on again, hopefully I'll be looking a little bit more refined. Right now, I got my Wolfman Jack thing on, been locked in the house again from the storm. So, and that's fine. I don't mind again. Hey, I work from home. I love that. I love that. Right. All right. Ain't nothing better than that. All right. You said Robinhood be catching you out there. Yeah, we got again. It's not the best platform in the world when it comes to execution because there's so many methodical and cumbersome steps that you got to go through even to get your order filled. All right. But again, we're talking about a commission-free trading platform, and it's mobile in a way where you're not having to worry about commissions. The best thing you could do in that moment is make sure that you find the best trade in the moment, so you can capitalize on that opportunity to get the stock, and get some movement in it once it starts getting the movement in the way you want to take it. Outside of having not necessarily get filled right when you want to, unless you can get a limited order. But again, it does take a little bit, a few extra steps to get your order filled on Robinhood or whatever the case. But again, I've learned how to master Robinhood. Again, literally all of last year to most extent, I was trading on Robinhood, making a killing, right? Making awesome trades. I was screenshotting, showing everybody what I was doing. And a lot of people like, man, this and I can't make no money on Robinhood. This trash, this, that, again. It's all about the person. That's just what it is. Let's keep it 100. It's all about the person. We know it still ain't the best, but if you learn how to master something, then again, ain't no kind of way where you can look at it as if as if it's just not a beneficial tool to you at the end of the day. I mean, you got to learn how to master it, for whatever value that you can. But it works out for you once you learn how to make it work for you. Again, that you on the job. You can't necessarily trade and open up your TOS or your E-Trade. They got a mobile platform for them too. But again, you just on the go. You don't have to worry about commissions, whatever the case. Keep you a few $100 in your Robinhood account, or 1,000, whatever. You got it like that. You know what I'm saying? And then again, be able to trade the market in a way where on the fly you just open that thing up, take your trade, going about your business. Well, in our case, hopefully we'll be able to start using it for options, since you can use option traders on it, and we can take some option trades together. Right, because again, I had been crushing it trading options on my Robinhood. I mean, I literally started the account over like $150. Right, I had like a little Robinhood challenge. True story. I took it all the way down like $150, and to prove that you can grow a Robinhood account, literally in 1 week, maybe about a week and 3 days. I caught a good stock in between it, maybe two of them, but that's the game, though. I mean, that it doesn't matter. I caught two good stocks along that journey, but about a week and 3 days, I took it from $150 and got that thing up to like it was like $2,600 in a week and 3 days in my Robinhood account trading options. Fastenal was one of the big option trades I took. All right, FAST. Some of you guys probably saw it with me. I was posting it. And also Whirlpool. We crushed Whirlpool, right? WHRL, right? Whirlpool into its earnings. So both of those were earning plays too. So I traded strictly earning plays on it for the Robinhood, for the options, and crushing it. Again, like the sister Rachel right now saying in the back chat, Rachel Fry saying, CPRT got earnings, right? They got earnings tomorrow during the AM. I'm already looking at it, and as a potential candidate here, because again, we have slim earnings this week. Not a lot of companies have earnings, right? Besides the ones that just named off early, AutoZone, General Mills had earnings today. Cracker Barrel had earnings today. Apogee, APOG, all those, pretty much dumped on their earnings. FedEx had earnings obviously yesterday after hours, and also Oracle, both of those had sold off too, right? So again, all those stocks I had literally short in the earnings. True story. I didn't take every single one of them. I took 4. I took Apogee, Cracker Barrel, a little bit of AutoZone, and what was it? General Mills, right? And puts obviously and naked shorts out together in that regard, excuse me. But again, all of them turned out to be right. So again, that's the power of being able to, obviously do your due diligence. The rest of it is still speculative. We don't know. There's no exact science to this. I could be wrong a lot of times, but again, I'm doing enough of the work that I can under my mental faculties to be able to make the right trade, and it's been paying off. Again, I can't complain. Hey, thank you for stopping by, family. I see my family, Toriana 81. Thank you for stopping by over, family. I'm working on that. Yeah, actually, I do have a Discord room. I've been working on this thing, man, for about a year. Just to be honest, I'm not gonna lie. But I've just been so busy lately, trying to get situated, so I can be able to really devote time to it, to really open it up. That's why I hadn't really been sending the link out to anyone, because I want to make sure I get it right. I want to get it, get the bots running right. And then I want to be able to devote my time to it. When I do say I want to open it up, I don't just want to open and say, hey, I got a Discord room, and I'm in there some days I'm not. I know it comes with a little, of understanding that we all going to be in there think tank and helping one another the same way like with the rest of all the other Discord rooms you guys are in. But I do want to be present there as much as I can, right, and really help, right, because I feel like at that point it'll be a responsibility thing of mine to be in there helping the people out, learning too, because again, I don't know it all. I'm still learning. I'm still new at this like everybody else, right? I love learning. I'm a data freak. Again, y'all know how I am. I'm a nerd at this thing when it comes to information. I love information, especially when it comes to the market. It's relative to the market. So I'm always looking for better ways to kind of get ahead of the game or get ahead of the market, use it to my benefit, and it's been paying off. So again, I'm working on it. But I do have one, and trust me, when I do have that thing running right and properly, I'm going to blast the link all over YouTube, all my other social medias, and you guys can definitely come in at any time you want. Right? It's no worries. You got a home, and you're always confident, and you're always welcome around me. Again, y'all know my disposition. All right, just respect and integrity and dignity. Right? That's how I roll. That's just how I roll. Right? So again, I want to make sure you guys are treated like the adults like you guys are. You guys are awesome individuals. Right? And I love that. All right, so yeah, but that's it. So thank you for stopping by. I see my family, Tiano Sullivan in the house. Thank you for stopping by, family. Thank you for stopping by. All right, I see my, let me see, make sure we ain't missing anyone. Yeah, so make sure I got everybody. Just want to make sure I'm respectful to everyone that's stopping by, hanging out with you, brother, even if just for a few minutes. All right, again, so, but that's that. So again, outside of that, guys, a beautiful day in the market here thus far for me. Had a beautiful day. Again, my biggest trade thus far was, well, both of them actually. At VKTX was was the biggest trade, right? Again, y'all, if y'all follow me during pre-market, y'all know I'm up early every day. Pre-market, study my behind. I'm up late at night, study my behind on every day before the market. So I posted VKTX to pretty much a lot of everybody's room. I posted it in every Discord room I was in that trade equity stocks. I posted in the Facebook Messenger group. Early, I think around about 7 or 8 o'clock, I posted VKTX, right on that news, and also that it was showing on this chart that it was spiking up. I sent a little, a screenshot of the chart, right? And the stock opened up around $10, guys. By pre-market, I think around a little bit after 8, something like that. And going to 9, the stock was already up above $20 a share, right? So it gained, we pretty much jumped over 100% in a matter of literally, minutes, 30, 40 minutes to hour. It was already over 100%, a lot faster than that. But again, just put it in the context of pre-market. So I already had in my mind, I'm taking this stock long, right? When the market opens up and really, shows some the settling out a little bit, I'm going to take this stock long. And I took it literally at $20.51, right? I think how many shares I bought? I think it was either 2,000 or 4,000 shares I bought. Somewhere I have to go back and look it up. Anyway, the stock took off. It went to spiking up. Got the stock all the way up to like $24 and change. I think I ended up selling around 23. 23.50, 23.60, somewhere around there, right? Nice trade out the gate. Picked up like $5,000 on that trade automatically out the gate. So I said, you know what? It's going to be a great day. Again, I already have some swing trades already going. Again, INO, even though it spiked up, I added more shares to it, brought my average to $9. It turned over on the back end, made money on that. Still making money on it right now as we speak. I took GOV swing. I swung that obviously into today as well. I had a target of 12. We hit the 12 today, right? Another great trade. I also swung TLRY. Yes, the juggernaut, the stock that drives everybody crazy. It makes your heart, pull your hair out. If you're short and you're long, that stock is just a beast, right? We've seen, the sentiment of this stock before it dries. We've seen the sentiment of this stock in LFIN, even though those stocks are more, fugazi and sketchy. Tilray, a little bit more founded stock, been getting a little press a lot from the SEC, not SEC, excuse me, a lot of the market analysts. So they kind of already doing their homework too. If there's any kind of negative stuff going on, they would expose it by now. The same way they did with Kronos, right? They actually dug up Kronos a little bit, and the guy Andrew Love had a little issue with it, and that's why he was shorting that heavy. But Tilray, that stock has been on fire, you guys. If you go look at the 3-month chart on Tilray, TLRY, like my brother Brian is posted right in the back chat here, you will see that stock is just up tremendously. We were looking at Tilray, trading Tilray around the teen area, like $11, $12 a share. Now this stock is up to like $150 a share. And literally by what, a month, somewhere around there? Just give it a month, a full solid month. That's well over 1,000%. Crazy numbers. You know what I'm saying? So again, you think about this from a perspective like, this is why the market is so awesome. And you should want to be a part of something like this. Where can you make that kind of, revenue return on your investment literally, in a month's time span or a 2-3 month time span? I mean, you could have bought that trade under the conviction that this is a long-term play for you, back when it was trading at like a $9 a share, $10 a share, and just sat in it. Again, we know people that were buying in that area and they held, and now the stock is way up here again at $150 a share. You cash out, that's your Christmas, that's your car probably pretty much paid off at that point. Your mortgage paid up for about 2-3 months. That's why investing is, man, this is why you cannot find me a better opportunity out there than an investor trader. Y'all have heard me say this like a gazillion times. It's the best online business ever, investor trading. Obviously, if you learn how to do it right and you respect the game, you can make yourself a boatload of money. But more importantly, you gain a lifetime of a skill set. Let me repeat that. You can make yourself a boatload of money if you know how to do this thing properly and right and be disciplined, but you gain a lifetime skill set that's out of this world. Because now you pass this thing on. You pay it forward. You teach your children. You teach your family members, your peers, whomever, right? This is not like a scenario where you have to go back and get recertified like a job or, if you're an IT specialist or something like that. No, once you get this, you set for life, literally. The market doesn't change. The technology probably is the way we can probably be able to trade, but the normal day-to-day mechanism value of the market does not change. These companies come and go, right? But the information, the indicators, the oscillators, the trends, the patterns, the price action, the ATRs, all the different things, that body of template value stays the same pretty much. You know what's happening once you see it. You hear news, you know what's already going on, right? The whole issue with Nike. Soon we heard all this stuff about them. Oh, we're going to boycott all this, that, and the third. People saw that as a what? Buy opportunity. Oh, we're finna buy the dip. Let them try to push the price down. I'm finna buy the dip. Because we know what? Fear drives the market. Greed also drives the market too, right? Bulls make money, bears make money, and what? Pigs get slaughtered, right? Pigs get slaughtered. So again, when we're taking a basic raw skill set as an investor, as a trader, you already have a natural understanding of a natural observation or a solid prowess about investing anyway, even if you don't know the jargon and the lingo behind it. Because number one, if you buy products, if you shop a lot, if you bought a house, bought a car, got insurance, buy regular products on the daily, clothes, shoes, whatever, toys, whatever, you actually already participate in the stock market. Right? You're already seeing the price value of the market happening in real time, but you're doing it from a consumer perspective. When price fluctuation, discounts on this, it's at full market price today, right? Or the regular MSRP or whatever price you want, the retail price, whatever the case, right? But we know these products are what high marginalized markup items. Right? A pair of Nikes or a pair of Jordans cost what? Like, I think they said what, about $13 to $17 a pair to make. $13 to $17 to make. They charge you guys, right? I don't buy Jordans no more. No disrespect to people that do. They charge you guys $200, $300, $400 for them shoes, and the shoes only cost $13, $17. Now, when you become an investor, you start saying, okay, well, is this a good investment? Is this a good investment for me to blow $200, $300 on these shoes when I know the margin markup on this thing is well over 2-3x, value, when I could just possibly buy the stock, the Nike stock, and just let the stock go out, and grow. Obviously you buying at the right pivot point, wherever it's at in this trading, trend or whatever, and let the stock price itself pay for your shoes for you by obviously what? Going in the direction you want to trade it. Be it you short selling it or you trading it long. You learn how to play chess, not checkers now. You don't blow your liquid capital on, overpriced item, that's gonna pretty much depreciate as soon as you hit that cash register button. So you learn how to play the game. So again, stock market offers you the option now where, okay, if I want this purse, right? Coach, I like Coach purses for the sisters out there, right? You like Coach purses. Coach is obviously a publicly traded company. I forgot that they changed it. They changed their name recently too. I forgot the ticker symbol. I have to pull it up. But you can go right to Google and pull up Coach ticker, publicly traded ticker symbol. Let me show you what it is. So again, you buy in the stock now. You buy equity right into the company now. You become a partner of the company, so to speak, a contractor, partner of the company at this point. Especially depending on what kind of class shares you got. The Class C, Class A, Class D, whatever. You even got voting rights for some of that stuff. You can vote people on all the board. You don't like the design of the new person coming out, you can say, hey, we need to kind of get the R&D people on to tighten up here, right? Because it's gonna hurt the stock. We don't have enough lines in it or whatever. You get my point. That's why I love this. You have power now, right? You have voting rights power. You have the investing power. That's if you're just a long-term holder. Basically, what I'm saying is, though, even though you buy the stock for the potentiality to get a gain out of it, and whatever you get from that particular, trade, that money or that extra or that interest value that you accrue from trading the stock, and then you make money off of it, that pays for your items now. That pays your mortgage now. That's paying your car note off. You need to learn how to budget even in the stock market. Learn how to use the stock market to pay your bills off for you. House money, right? If your mortgage $2 grand a month, again, I spoke about this last live stream. If your mortgage is $2,000 a month, whatever the case, a little over, whatever. Again, you can break that down from a weekly perspective, right? Where it comes down to what? $500 a week, right? You get 3 days out of the week in terms of pattern day trading or PDT rule that you get the day trade, right? Even if you're going to day trade, you don't have to, but I'm just making presenting a template here, a scenario for you. So out of 3 days, you have to make it what? $500, right? By the end of the week, right? To be able to kind of hit your goal, to be able to pay your mortgage off with house money or free money at the end of the end of the month. So that means you have to pick none out your pocket, out your working liquid capital that you may have when you have a job, and now your bills are getting paid from the stock market alone. So you break that down, that's roughly about what? $180, somewhere around there, give or take. Out of those 3 days you got to make. So you got to make $180 a day out of 3 days, somewhere around there, to be able to hit that $500 goal at the end of the week, hit that $2,000 goal at the end of the month. That's your mortgage payment right there. You didn't have to pay none out of your pocket. Didn't have to worry about, whatever, shifting the bills around. No, this is how you win at the game of so-called capitalism. Doesn't mean I advocate it in terms of what it really means, because we know it's a very evil value to it too. I'm saying we got to learn how to play the game. Excuse me, the same way that they're dealing this game to us, these cars us, we got to learn how to play the game. Right? So again, that's why I go hard about this kind of stuff when it comes to financial literacy, when it comes to the stock market. That's why again, there's a method to my madness. There's a reason why I'm this way. I'm hardwired. I got all this energy. I got all this passion. Right? There's a reason I like this, because I see that this is going to help so many of you guys. It's going to help me too. It's helping me too. Right? And as I always say, we are exceptional people. If you don't believe me, look around your peers. Look around your family members. How many people around you trading in the market like you? Even in long-term investments. And that should be troubling to you. I mean, that's why they look at you like you some kind of, anomaly or something. Like, man, what is the stock market stuff, man? I don't know nothing about that, man. That stuff gambling. They throw out all kinds of excuses in the book, right? And they don't realize that this is their ticket, into a better life in a lot of ways. Because again, the global financial markets is something that's been happening for eons. This ain't nothing new. This is an old industry. I mean, we go back to the old silk trade route. We go back to the spice routes. That was a form of investing in trade and global commerce. That's what it came stem from. The Asians and the Indians were the first one to invent trading, to be exact. If y'all don't know the history behind this stuff, again, I'm a nerd of this. I do go back. They invented this stuff. And then obviously other, countries, a long time adopted it. And now here we are today in this entity value that we have now, being that the U.S. As a whole has taken it to the next level because of the economy that's here, obviously in this country, is a more aggregate value of wealth generated because of the products, because of the control of a lot of the different resources that, has happened over time throughout, throughout the history here. But again, best market to be able to trade is U.S.-based market. We have the most liquid assets to trade. So that, I mean, a person cannot convince me that, if you do this right and properly, that you cannot make $180 a day. I'm just being honest. Even if you make $10, that's still a win. Don't get it twisted. There's no set amount that whatever to make you feel like, you ain't doing enough or whatever. Again, any win you get from the stock market is a positive regardless. But I'm just trying to give you some understanding why this is important and why, if you could, you should devote more of your time to learning this craft in between of doing a lot of other trivial things that obviously deplete your finances because you spending money and not necessarily bringing more in, right? Your balance ratio, right? Your debt to equity ratio is not balanced properly, right? If you're spending more than you bringing in, that's not a good ratio, right? If your job is only paying you $100K a year, right? And your bills are already 2/3, value, the X probably more than that for most people. They paying 80% of their money off that 100,000 is pretty much allocated in bills, and you only got a 20% extra value of miscellaneous to work with. That's not a good ratio, right? And even if you take 10% of that 20% that you have left, and that becomes your miscellaneous, if you're not investing that back into the stock market, then you lose it. Because that means every year that inflation goes up, you actually poor the next year if you didn't get a raise. Let that marinate. So that's why you're never going to hear me advocating go out there and get a job unless you're going to use that job as a catalyst to get you to the next level in your life, meaning to be your own owner, operator reality, right? Stop building somebody else's dreams, learn how to build your own dreams, right? Learn how to become an independent connoisseur of economic, expansion for your life and your family. The stock market gives you that ease of access. You can open up a brokerage account faster than you can open up a bank account. Let that marinate. You can open up a brokerage account faster. You can open up a bank account. Let that marinate, right? And you can make way more money in the brokerage account than you can with a banking account. And I know I spoke about that several times, but that's why I keep mentioning it, because I know the importance of what it really means if that really sinks into your psyche in terms of how you need to start, managing and budgeting your resources. So we do more than just come over here and talk about, okay, this stock and this, that, third. No, we talk about everything. We family over here. We're going to talk about real world and life issues and how it affects us and how can we use these certain different asset classes to benefit our future. Simple as that. So we talk about financial literacy as a whole. That's what this thing is all about. So again, just want to put that out there. All right. So again, moving on. So again, I'm going to share my screen here, guys. Again, I didn't plan on really being on and kind of building today. Again, I had to go just come on and set it up, let the rest of my trades run throughout the rest of the day. And then I'm going to go hang out a little bit here, even when it's cloudy and gray out here. But hopefully tomorrow I could do a full day of live trading. We'll do some breakdowns like we did the other day. We'll open up and look at some charts. We'll go over some trades together. We'll think tank basically what we come here for. Y'all guys come here to think tank. Let's think tank, right? Let's put our good, our thinking cap on. Let's find a way to get to the bag, right? That's my motto, right? The bag is not going to acquire itself. Simple as that. End of discussion. The bag is not going to acquire itself. It's up to us to go out there and acquire it. And it's up to us to help one another if we can, right? To be able to get to the bag, right? So that's why this is important. All right. So I just want to put that out there. All right. So again, hey, thank you, panel. JL Turner for coming through. I see you, family. I see you, Over. Thank you for stopping by today. Power of profit to you, family. All right. So again, that's just my mindset here on the back end of the day here. Tomorrow, hopefully, I'll look to do a full live day of trading with you guys. Go over some trades. Maybe we could talk a little bit about some options. Again, I think my brother, Mr. Maniac, he took the Cracker Barrel. He was discussing Cracker Barrel this AM, and he was trying to figure out, how to buy it. Because this is the first time I'm actually buying an options contract on the Robinhood account. He followed the little advice. I was telling everybody, hey, You're making all this money on trading in any different brokerage account. Take your $200-300, throw it in your Robinhood account, right? Make sure you have the option, ability, value, able to where you can trade options on it. And then let's get after some of the earning plays, or let's get after some of these, day trades, even through your options account. You make your little, pad that account and just grow it. Again, that's miscellaneous money there, right? That's it's exciting. So he bought Cracker Barrel. He bought the 150 strike price puts, right? He was already buying it in the money. See, if you buy a stock that's in the money, meaning as soon as you hit that buy button, you already up in the options game. Meaning you already up, you already in the money when you buy it. And if it tick anywhere more in your favor, meaning if it goes down, which the stock was, he's buying the puts, meaning it's going to go down, he's shorting it, right? That thing can just turn over real quickly. And he sold it so fast because he was already up. He didn't know that. He didn't give enough time for the asset to really start the moving. So at that time, I think when he bought it, was sitting at about 100 and I want to say like 46 or somewhere around there, 145 or 144, somewhere around there. And the stock dropped and went all the way down to like $141. And had he stayed in that stock at that 150, strike price value, or the strike that he bought, at the 150 puts, man, he could probably made he made 150 in the money. He probably been up roughly about $500-700, somewhere around there, about $500-600. Literally, the matter about, I think it dropped everybody about 30-40 minutes. About 40 minutes, he made like an additional $500-600. Just playing options, day trading options, right? So basically, that trade cost him $300. I think it was like $320 for that contract. Right, it's $3.20 for the contract, which is equivalent to $320, 100 shares per every one contract. So if he bought one contract for $320, which is $320, and obviously the stock plummeted, which it did, he just got out too soon, he would have picked up additional $500-600. He would have made around about $800-900 off that trade in about 30-40 minutes, somewhere around there. Again, the power of options, all right. And now he would have never have made that if he was trying to buy that stock outright, right? Shares cost $140-50. And you only got, $300 to spend, then you're only buying what? 2 shares. 2 shares to start drop, what, $3-4? Well, how much you made? $8-9? Wow, that ain't nothing to get excited about, right? Right? The power of options. Now y'all see what I'm saying? The power of options. Right? That afforded him 100 shares at $320, and he would have picked up $800-900 when it's all said and done. So again, that's why this stuff is exciting, man. And I cannot wait to begin to unpack this stuff more and more when it comes to options. I'm going to bring on people, like I was saying before. We got some option gurus out there, people that's very knowledgeable, have been trading options for a long time. And they're literally pretty much living their best life, courtesy of the stock market, just by trading options and options alone. Just making a killing. Again, we got people that, pop up, I made 20 grand a day in options. 50,000, 5,000, and whatever, just making buku crazy numbers in the options market. You guys got to want to be a part of that. Even though you still trade equity stocks, long or short. So again, it's opportunity, guys. That's all I'm saying. All right, this thing is about opportunity. Yeah, 100% right, brother Benny. We can use $180. Again, that stuff adds up. Again, 3 days out of a PDT, a lot of trading days you get out of the 252 trading days out of the year, you add that up. If you just did a minimum of 180, 3 days out of a week under the pattern day trading rule. Actually, I have an algorithm chart that I present to people about how you can make additional $25,000 in supplemental income at the end of the year, just starting off with a measly $1,000 and trading stocks and I'm looking for 3% a day. Only 3% a day from $1,000 start investment. If you traded this strategy properly, or this mechanism value of strategy, this template properly, then you will end up with about $24,000 to $25,000 extra supplemental income on your annual asset value. So again, you take that same scenario I was just talking about with that $180, right? $180, know how to get $180 out of 3 days out of the week, right? That compounds to what? 360, what? 180, 460, then additional what? 20, whatever. So roughly about there 480, somewhere around there, $500, like we're saying, right? So that's time 252 trading days that we get out of the year to trade. 252 days that are allotted that we have to be able to trade the U.S. stock market. Now you do that times 252, y'all see what I'm talking about here. And all you're doing is pushing buttons. Read a few charts here and there in your free time. Go live your life. Or like I'm about to do, about, go kayaking, even out here when it's about to storm, right? Unless you come down hard, then I'm not going to go. But either way, I have that option, right? That's the goal, right? To have that option, to be able to live life on your terms, so to speak, right? So again, that's why this stuff is important. That's why we need to break this stuff down and make it make sense so you guys can understand the importance of it. Again, you don't need me to tell you this. Some of you guys already know it. Some of you guys are mathematicians, finance majors, business management majors. You already know the whole deal. You know about compounding interest. You know about, debt to equity ratios. You know about equity and leverage and margin and valuations and cash flow and EBITDA and all this stuff. CapEx spend. You guys already know this stuff. You're probably working on your certain job somewhere. But how beneficial is it really to you unless you're really doing it for yourself? Right? Until you really applying it for your value, not for somebody else padding the CEO pocket, applying it for your value. So this is where the rubber meets the road. This is why you're not going to convince me by taking the time to learn this strategy, or this industry, so to speak, right? Or this field as an investor trader cannot benefit you if you just learn how to take the time to really get this stuff. That's why this stuff is awesome. And you guys are already good at it. Y'all just don't know it. We already good at this stuff. We just don't know how to put it in the context, or no one is taking the time to break it down and put it in context for you. I mean, there's always somebody want to sell you a $5,000, let me teach you how to trade, cost you about $5,000, $10,000, right? But again, everything you need to learn how to trade stock market literally is free on the internet. YouTube, Google, free university. Cost you $3. The only problem with that is learning how to unpack the information, learning how to unravel all this new data and this jargon and these trends and these patterns and these candles, these oscillators, these indicators, all these different things. Learn how to unpack all this stuff. Not that you can't even without someone tool it, but I'm saying when you got a really good mentor, someone that's really about you, about helping you. I'm saying personally, imano, right, face to face. Be it live stream or whatever, that's what helps you get there a lot faster. Those are the kind of things I would advocate. If you think about want to learn this, find a mentor, not pretty much a classroom setting. Find a mentor where a person can devote personal attention to you. Right? Set aside time for you, right? And help you unpack this stuff. In between time, you do your own due diligence as well. Again, if you're hungry, you're gonna do what's necessary. Literally, that's how I learned how to day trade. True story. I just came out the gate. Oh, I'm finna what? I'm just not getting wind of this. Why haven't I been doing this? I already knew about long-term investment, but I wasn't day trading. So when the light bulb went off, I'm like, man, I should have been doing this 20-some years ago. What? I'd have already been a millionaire at this point. And that's literally how my mind said. Well, after that point, I said, "Oh, it's going to be over." I said, "Oh, boy, they didn't let the wrong person in the door now." And that's still my mentality and my hunger and my fervor to this very day. This guy right here, y'all seen the little memes on Facebook and Twitter when they be like, this guy right here. Oh, I'm passionate about this. I'm finna get this bag. I'm finna get this bag. Believe me, see it in my eye. I'm finna get this bag. And you guys should be thinking the same way. I'm going to get this bag because they let me in the door, right? I mean, they let you in the door. You guys found a way to learn this, even to where you are now in your respective stage in your trading, learning curve. But again, as long as you hover and stay around this stuff, you're only going to get better just by being in the proximity of it. You're only going to get better. And you don't have to be certified. You don't have to have an MBA. You don't have to have a BA. You don't have to have all these certifications. You don't have to have none of that. You can be an average person off the streets, literally. I mean, I mentor people that are working at McDonald's, family that's working at, so-called jobs people frown upon, whatever the case. They doing what they need to get where they need to go. But ultimately, in the end, you on the fry line at Mickey D's. The manager giving you all kind of slack and heat. You day trade on the job, looking at your account, you can buy some options. You know what I'm saying? You up 700-800% on the day, right? From $100 or $200 investment, right? You up, over 1,000 plus on the day. And you like, you don't even make that dang near almost 2-3 weeks on the job. You look around like, do I need this? I don't even need this. I don't need this. That's the mindset. Financial freedom, what I'm talking about here. Being able to call your own shots, because the market allocates you the opportunity to put you in that kind of gains or returns literally in a matter of seconds. Seconds, not hours, not minutes, not days, but literally seconds. That's why you need to be, y'all, when the guy like, can't get fired if you ain't got a job. Can't get fired if you ain't got a job. Right? The market will provide. It's not easy. I'm not saying it's just completely easy, but it is more user-friendly once you learn all the necessary steps to be able to use it properly. And I'm saying it's not easy because a lot of people like to try to shortcut their way into the opportunity, right? They just want to do the necessary steps to get to the bag. Do all the things, be given all the things to get to the bag a lot faster and learn how to go out there and get the bag themselves. Pretty much learning how to fish, right? Anybody can throw you a fish, right? Anybody can throw you a stock and say, hey, just do it just exactly like this here and you should be good. Anybody can do that all day long. You follow the instructions properly, you learn to follow instructions properly, you will be profitable. Yeah, okay, that's fine. But what are you learning on your own to be able to do this under your own reconnaissance? Like you go off to take a trip somewhere, you still need to learn to trade the market without feeling like you're handicapped. You need other people to tell you how to trade. Well, you already know your brother right here going to teach you everything I know, share with you everything I know, and then learn from you in the same breath, because a lot of you guys already got skill sets even way ahead of me too. So that's why I said it's a think tank. Simple as that. Simple as that. So again, like awesome calls. Awesome calls. You're 100% right, brother T-Bone. I thank you for stopping by today. Over, I see you in the house, family. Over, Derek, thank you for stopping by. I see you in the house, family. Thank you for stopping by. You already know it. I see my family, Young G, in the house as well. Thank you for stopping by. Over. I appreciate you guys. All right. Again, no disrespect to none of that or nothing against none of that, but I'm just saying we want to be self-sufficient, right? That's what it's all about. We want to be self-sufficient traders. We need to know how to do this under our own, right? I can go kayaking and be in the kayak way up the lake somewhere, about a mile up the lake somewhere, kick back, chilling out there in nature, right? As my brother say, Ralph, y'all know Ralph, Infinite Water, be out there breathing in all this good ass Prada, baby, ooh, whatever you be saying, y'all know what I'm saying. Infinite Water, diving deep, y'all know what I'm talking about. I could be out there in nature, getting to the bag, trading from our mobile phone, making more money than most people sitting on a job right now, working 8-10 hours a day, catching all kind of trouble and slack, and be comfortable. Be comfortable. Can take a trade like Cracker Barrel, like we were just saying here. My brother Mr. Maniac taking that trade today in the options market, and make again $400, $300, $400, $500, $600, in a matter of literally minutes, and call it a day at that moment. Shut down trading. Don't have to overtrade. Shut down trading at that point, because you made about $700 in literally about 30-40 minutes, and you're done for the day. And you're literally done for the day. Go work another job. Go hang out with your family, your friends. Kick back. Study more. Whatever. That's why the light bulb should be going off right now in your head. Like, why would I want to learn this? Y'all got to be around traders now making this kind of big money right here. It ain't so taboo now that you're in the door. Now that you're in the game, you watching people make this kind of money. When you probably heard stories before when people saying, man, I know people make $100,000 in a day trading stock market, 100,000 plus, 50 grand a day, $5,000 a day. And the first thing came, man, yeah, right, whatever, man. Show me. Oh, you lying, bro. You don't know what you're talking about, man. You just talking. And then you show them, then it's like, bruh, bruh, y'all serious? Oh, yeah, this happens every day, family. If not every day, close to it. People making this kind of money every day, living their best life on their terms. And you're going to convince me going to work for somebody else, being told what to do, how to do it, when to do it, even when can you go to the bathroom, is better than being, the author of your own life, being your own owner operator, so to speak, right? I mean, again, this is a no-brainer, guys. It's a no-brainer, right? So I know I get passionate about this stuff for a reason. But again, that's my love for this, and that's my love for for you guys too, because again, y'all know this is me 24/7. I don't change. I'm like this every single day. I'm like this every single day. That's just me. I'm like, dude, I'm like, sis, let's go. Let's go. Let's get this. Why wouldn't you want to have this? So that's why I don't mind open up my platform. Again, I'm not someone big. I don't claim to be, but I am a brother that really has the kind of mindset where I believe, when one teaches to learn. That's why I stand by the Yoruba proverb Ubuntu, which means I am because we are. Meaning we are effectively better when we're think tanking together to trade against the stock market. When we pool our mental resources together, right, we are always going to be better at being being able to corner the market, even if than just kind of trading alone. Which you can still be effective at it. Again, don't get it twisted, because I get it done. I get it in, even if with or without people. But having more eyes and ears on the market with you simultaneously makes your opportunity even that much better. So that's why I want to say, man, this is not a competition against each other. It's a competition against the stock market. We're actually effectively trading against the Jamie Dimon, the Warren Buffetts, I mean, y'all know plenty of them out there. I mean, all these big analysts out there, the hedge fund is not. We're trading against them, and the market makers and all that. All right, that's our competition. Those guys, so to speak, if you want to say that. All right. So again, for us, it's again just a no-brainer. How can we help one another be better at this? And that's what I want to do. I want to offer up my platform to help you guys to bring truth to power, to bring on special guests, to do whatever we need to do to get to the bag. Simple as that. That's it. That's just my focus. I have no other ulterior motive than that. Because I get better by engaging you guys. You get better by engaging me, meaning teaching me, training me, sharing with me. That's what a quid pro quo. We, exchange here, even exchange. That's why this stuff is important, right? So, yeah, we can expect to hit the A here. That's it, family. You already know it. That's it, family. But that's it, guys. So, I just want to end it at, at that. I'm gonna share my screen here again. Again, I've been sitting there watching looking out my window here in my office, and I'm like, it's like a little kid that want to go outside and play right now. And man, I can't go play right now because the rain coming down. Again, you can see right here. That ain't looking too good right now for me. I want to go out there really bad. Go down to my state park and go do some kayaking. I've been, locked up in the house over this hurricane session here. Again, nature having its course. I respect nature. That's why I like communing in nature. But the rain just won't let up right here. All right, so I may have to push it back a little bit, or I may not just be ready to go today. Who knows? But either way, again, just being able to be in a position where I can go and not having to worry about, somebody telling me I can't, go enjoy my life or go out there and enjoy, some simple pleasures of life. In terms of being out there in nature, that's just, that dog ain't no hunt. Again, that's why we do what we do as investors and traders, again, to put ourselves in the best position to win at life, live life on our terms. So whatever. All right. So that's that, guys. So, yeah, so let me, again, share my screen here. Again, you guys got any trades, stocks that you're looking at right now, we can discuss it since I'm still stuck. All out of rain got me. As y'all can see, the rain got me. So I'm here. So, we can go with some stuff if you guys got any trades you're looking to take. If you think about anything particularly, we can discuss it. If not, I definitely share my screen here. Oh, let me see. Real quick. I was talking about, we got one stock that has earnings. The CRPT, hold up, let me see if I can share the screen. 1 second. I think it's, yeah, CPRT, excuse me. I was discussing that earlier with some guys on Stock Twits, particularly about taking that here into earnings. Again, crushed AutoZone, we crushed Cracker Barrel, we crushed Apogee, APOG, and we also crushed General Mills, GIS, right? Even FedEx and Oracle yesterday, called those short. Both of those end up, obviously pulling back and selling off. All right, so let's see. Yeah, I did. I messed up and said CPRT. So it's actually It's CPRT. All right, so it's spiking up a little bit here. All right, so let's so this stock here just fell below the 20-day moving average. So it's actually showing some weakness here. It's highly extended here. Going into the earnings, got up there near $67 here at, I think the 52-week high was like 67 bucks, 67, yeah, 67, and showed a lot of what, obviously, extension up there, highly extended, overbought pretty much on this quarterly chart value, I mean, this 3-month chart value going into this earnings. So even if they beat on earnings, they have to have what they call blowout numbers and a super good guidance, meaning their next particular quarter that they're going to come into has to show some great favorability for this stock to continue to go higher here. If it comes in kind of malign numbers, the numbers are not that great. They have, even especially lower guidance is definitely light side. But if they even barely beat earnings, it may not be enough to sustain the stock. It may pull back. Again, that's speculative. I'm just giving my observation. I could be wrong. I don't have a problem being wrong because I'm still a student of the game here. But I've been doing pretty well on these earnings of late. And I'm just trying to find ways to corner this market every day, how to dumb it down and make it make sense to me. Right. So again, CPRT again, looking at the option flow chain here, the stock actually is about balanced in terms of calls to puts going into earnings. All right, let me share my screen here. You guys can see what I'm talking about here. All right, so yeah, so right here, CPRT right here, guys. You can see this right here on my screen here, well, under my mouse, pointer here. It has earnings tomorrow, actually, excuse me, before the bell opens up tomorrow. All right, so again, if you look at the options volume here, it's only like 3,100 contracts so far that has gone through. Right, not bad, for a stock trading at the price that it's trading. That's only a $60 stock here. The call volume, if you see this row right here, the call volume. This is the option we're talking about here. The call volume is 1785. So 1785 value contracts going in for particular that the stock is going to go long. That's what call is. Off the stock going long. The puts, excuse me, the puts at 1340. Right, meaning these are the people that's looking to short the stock. Right, so they're about balanced. That's a good ratio for puts to ratio call value. For a particular, when you have that kind of level of balance there, that means people are not too confident about this stock being no earnings. Even if they do, they think right now, at this level that it's trading at, because it's up there, not that far from a 52-week high, that the stock is ready for a pullback, even into earnings. Right. All right. So the price to call ratio, put to call ratio there, obviously is about a 0.8% value. So it's pretty much close. It's pretty much close here. In that regard. So, again, opportunity here, some opportunity here in this stock possibly here, ratio about 5 to 1, excuse me, 5 to 1 ratio there, excuse me. And also, again, you're looking at, the opportunity in this stock to move here, ratio value, you may get a good little movement out of this stock, about 5, 6, 7%, somewhere around there, give or take. All right, so again, just looking at CPRT here, some good favorability here for the stock to probably pull back here in the earnings. Even though it has a lower guidance here, as you can see here, this is the lower guidance that it has. Going to the earnings sentiment is that it's going to be around about 42 cents, adjusted for earnings per share. But pretty much earning whisper is some of the analysts are looking for around about 47 cents, 46.5, 47 cents per share in earnings growth over the past 3 months. All right, so that ain't looking too good right now in terms of the sentiment. Meaning people are not favorable that this stock will hit that 47 cent value of earnings per share value, even though it just went up there and crested at a 52-week high. Here roughly about a day or two ago, somewhere around there. All right, if we go back and look at the chart here, just not the best chart, but again, just using it as a litmus here. I think back on actually 9/11, I think it went up there and hit around $67 and some change on that day on 9/11. All right, so right now on the 18th here, we did pull back some since then. Bottom out around 63.81, and now we're up to like 64.19. Obviously, just trending a little bit here, going into the close a little bit. All right, but again, looking at that 3-month chart, this is the 3-month worth of what movement the stock has gone through. And that's pretty much an extended chart. Not necessarily a bad thing, but you know, again, going into earnings, look at the 6-month chart here. That thing was up there peaking. That's nosebleed areas. Think about where the stock came from. You know, it was down here trading at around $50 a share back in April. You know, and now it's up to like, you know, 67. When it hit 67, you know, if you was long this asset around April, you know, you picked up $17 a share. If you held this long into this earnings, you didn't pick up $17 a share. Chances are you probably getting ready to make you some profit, right? It's time to, you know, shave a little bit off this duck right now, right? Because right now that thing getting fire roasted in the oven. Been in there a little too long, right? And not that it can't turn, still go higher, but in these moments here when the market still looks a little dismal here, or if there's anything that's, you know, surrounding its particular sector that may cause this stock to kind of hit a stagnant point, these are some of the parameters you want to be looking at. You know, is it time for this sector to cool off? Like the other day, the consumer staples were just tearing it up yesterday, right? Everything else was selling off. Tech sold off yesterday. Oil didn't do good yesterday. Financials got beat up yesterday. And I'm talking about sectors as whole. The only particular sector that did very well yesterday was consumer staples, right? They were beasting yesterday. And guess what? Today, guess what sold off a little bit today? Consumer staples. They was extended, right? They was extended on the daily, right? So they pull back. And that's how the market is. Again, any given day, any particular sector may be up and running, and the others may be down. Or you may just have simultaneously value where all of them are running. But that's on a very, very extreme bull market case scenario, right? We're not necessarily in that kind of mentality anymore. The market is still in a moment of capitulation, if you ask me. It's trying to figure out if it want to go higher or if it's trying to be stagnant, or is it getting ready to turn into a bear market and some of this stuff pull back and sell off a little bit like it did back in February. Right, end of January, February, we had that big market deep market pullback. Right, it was ugly out there. It was ugly out there. Everything took 20%. Sometimes some of them near what 17, 15, 20, 30 some percent haircuts in that deep pullback. It was ugly. The shorts just ate beautifully. I mean, I know I did, but again, that's why I love this market. So we just watching, watching and waiting for the trends to reverse, be it up or down in the overall market. What I'm saying. So again, so CPRT looks a little extended here going into earnings. So I mean, I like the puts in this thing going into earnings. Could be wrong. I might need to hedge it and buy some calls too to hedge my position. Because I'm not 1,000% on this one like I normally do in some of the trades I take. Again, it's all about your conviction. You got to ask yourself some basic questions before you take an asset, being what, why, where, and when. If you can answer at least 3 of those questions, then I mean you're in the right place. Enough to make sure that you're comfortable taking that trade, even if it goes against you. You've done enough of your due diligence to put you in that position, right? So again, we understand that nothing just goes straight up and nothing goes straight down. And even if you're wrong, sometimes doesn't necessarily mean that you just not a good trader. It's just the market is speculative, right? Stuff happens. Wild stuff happens. That's the game. But again, we're not going to cry. We're just going to find a way to get that back and take a long or take a short, and get the money back. That's typically how I trade. If I take a stock short in the earnings, and typically goes long on me and goes against me pretty much, I close my position the next day and I'll take it long, get some of my money back. If the stock is still trending upward, I just take it long and go, take it long right along with the trend. Get back on the bus and ride it the other different direction. Make some of my money back. Simple as that. I mean, it seems odd to some people because some people get emotional. If a stock beats them or burns them, they'll get mad at curse stock, got called all kind of different names, everything except a child or whatever of the universe, and then don't understand that they can turn around and still trade the same stock and get some of their money back because they just not even know the stock is already going the way it's going, opposite direction. Ride the trend, ride the boat, get on the boat now. Again, I don't take none of this stuff personal. I'm like, hey, okay, you get me one way, I get you the other way. All right, that's it. You can't beat them, join them. That's kind of the mentality you got to think about as a trader. If you can't beat them, join them. If it goes against you, join the stock until the trend is going. If you try to take the stock long and it dumps on you, don't get mad if you can't, unless you can't short. Don't get upset. Find a way to short the stock now. Find a way to short into that movement now, because it's obviously trending downwardly, and y'all know stocks go down a lot faster than they go up. So that makes for a very slippery slope for you to get your money back and then some. Right? So that's why I say this stuff is exciting, right? Because again, if you learn how to use all these kind of different, thought processes in terms of where you trade, then you'll never find yourself literally taking a real bad loss. Especially if you learn how to mitigate your size of it, scale your size properly, all that kind of stuff. You'll do well. And you don't just come out the gate going all in on the earnings play just because you can. That's gambling. That's not trading. You can get lucky here and there and find right one and get up. But again, we don't want to make those kind of decisions. We want to make good decisions based upon the due diligence and understanding the chart process, understanding the catalyst process, understanding all the metrics behind it. Right. So again, you take TLRY here. The stock is on fire. Stock picked up 25% today alone, up $30, near $31 a share. I've been shorting this stock off and on. Man, it's like this stock has been one wild ride. I tell you what, I enjoy it. I enjoy it. I enjoy it. It burnt me twice today off a swing and also on a short. I got caught, a little too tight on it, and then they said to give it time to breathe, whatever, it burnt me. But I got it twice. I got it back twice. I got it back. The game's back in a little extra, but this has been one wild stock right here, guys. I mean, I don't recommend this stock for nobody that don't understand the value of tight pivots and channels and how to read the spread, the bid and the ask. If you ain't ready for that kind of trade, then again, don't try to day trade these kind of stocks without having a real plan, a concrete plan in mind, because this one here is a wild beast savage and it will turn on you in an instant. Right? It could be brutal too. But again, this stock has been on fire. So you go back and look at this chart here. I'm going to show y'all why I say when this thing actually finally crashed, ooh wee, and I'm going to be waiting because I know how I am. I'm going to be waiting to eat the meat of this move here. This stock literally came, let's take it back. Hold up. Let's go. Let me see if we can get this. It's probably going to give me a more accurate description. I need to probably go pull it up on TradingView. All right. So I can give you a more detailed view of it. Okay. We'll just use it for right now. All right. So right now, let's just use this stock, this chart right now from where it looked like now. Right. Come on, thing, stretch out. All right. Whatever. All right. So literally, stock came from, about $20 a share, around the end of July, right? About 20 bucks a share, 20 bucks and change, and went all the way to 151 bucks in a matter of a month and a little change. You talk about a solid investment. And now again, I bought some of it into this and sold. I didn't hold it like this, but again, if I bought this as a long-term investment, I was telling people to buy and hold. Some people I told that actually. Tilray, again, that and CGC, those are the more reputable ones. Chronos, not too much. I didn't see enough due diligence behind that to really be excited about holding that long. But CGC and Tilray, I was like, yeah, those are some good marijuana plays. I've loved trading marijuana stocks, and I started out trading marijuana penny stocks. I was trading other stuff too, but I got a affinity to trading marijuana stocks back last year. Back then was OWCP, MNTR, CBIS, CBIS, TMWJL, or TWMJL. Before they changed their name, they did a merge and changed their sticker symbol. I mean, I could go down the list. There's so many. Aurora, Adibus. There's so many different marijuana companies I play, like penny stock, like trading at 001 and 000 this. And man, hey, my biggest two ones that I made a lot of money on though was MNTR. Some of you guys know me from Sal old Discord room. Those are the only two stocks I used to call in a lot about. MNTR and then OWCP. I made good money on those stocks last year trading them, marijuana stocks. And those like sub penny stocks. Some of them were sub penny, but now they're above that. Some of them above those prices now, right? But again, I know the marijuana space a little bit, basically what I'm saying, right? Not no guru at it, but I know it enough. So Tilray offered up to be a great investment on on the long side. If you think about where the stock really came from and how good it of a move it has made literally over the past 3 weeks. Excuse me, 3 months. And if you look at it even from a month perspective, look at the monthly chart. Look at that, guys. 1 month, this thing came from 30 bucks, all right, and went all the way to $152. I imagine you could have bought one share of this thing, just testing it out on your Robinhood account. Bought one share back on, August the 17th, literally. August the 17th, you could have bought one share at $30.50, 70 some cents, somewhere around there. And you'd be up already 100 bucks. 120 bucks. So 30 bought you 120. Now y'all see the power of investment. Not to say that this happens all the time, but again, we talk about understanding the power of investments, the opportunity thereof, knowing that you could and you can. You know, that's phenomenal. Okay, you could have bought 100 shares, you know, 100 shares at that price, cost you around what, $3,000 and what, 75 cents, somewhere around there, 3,075 cents, right? It went up $20 a share since you bought it back then. So you got a 120 times what, 100 shares. You do the math on that, right? You do the math on that. You know what I'm saying? I mean, come on, guys. But again, that's why this stuff is awesome. So, you know, just kind of sharing that little moment with you guys, just kind of showing you what I'm talking about. But man, the market is awesome. You know, the opportunities are just you know, to be able to do this stuff the way we do, to be able to benefit from it is awesome. You know, so that's why I say, you know, these opportunities that we're doing and we're talking about and learning and sharing and doing the investment workshops that I have myself personally, you know, again, I take pride in being able to kind of, you know, bring good content to the family, right? Because we can benefit from this. And on top of that, you know, we can, you know, be able to take care of our family, our friends, or whomever in a very, very useful way by being able to, you know, to learn how to trade the stock market effectively. You know, simple as that. You know, simple as that. Right. So again, so just kind of going over that. So again, I'm gonna share my screen here on the back of the day. I've been talking about that for the longest. And this hadn't got around to doing it yet. But I had a phenomenal day. You know, thus far. I mean, I had a great day to be exact. But again, you talk about just the opportunity that this thing affords us and allots to us. I mean, it's unlike anything out there, man. I tell you what, man. You find me a better scenario out there than investor trader, man. I tell you, this stuff is awesome. Man, this stuff is like super awesome. You know, so again, I'm excited for the opportunity alone. So again, I'm up on the day here roughly around about 11 grand. And y'all know the meat of the move. Some of you guys were trading with me in the Discord room. Y'all know the meat of that move came from VKTX and NIO. NIO is still dumping here, guys, on the back end of the day. I told everybody I was going to take this stock, you know, the INO down to the $7 range yesterday. True story. Yesterday, I was saying we're going to take this thing down to the $7 level, right? Right now, we're down at the $7 level, right? Simple as that. We're down in the $7 level. So I'm up on this stock right now, around about 4,800 bucks, right? With an average of my average here is $9 again at 4,000 shares. You know, and it's still dumping here in the back of the day. You know, I mean, this stuff is, man, come on, man. Come on, guys. Come on, guys. Let's get it. All right. And some of these stocks I'm gonna swing because again, there's no need to get out of them. There's no need. Because again, the trend is confirmed, right? Y'all know me. I like to eat the whole meat of the move. Y'all know me. I don't play. I don't leave no meat on the bone. Even though I'm vegan, you know. But y'all get my point. I don't leave no meat on the bone. You know, if I can dig into this joke, I'm finna get it. I'm about to get it. You know, that's my mindset. Simple as that. I'm finna get it. You know, so again, we live for these moments. You know what I'm saying? Because again, any given moment, you know, we can find ourselves in these scenarios here. We can easily find ourselves in these scenarios here, getting to the bag, taking advantage of the opportunity, and you know, again, benefiting from it. Simple as that. And look at VKTX just dumping here. VKTX is dumping. Let me share my screen. Why am I talking and not sharing? Sorry, guys. Forgive me here. Hold up. Okay. Okay. Yeah. So VKTX dumping, INO dumping, and we looking really good here. Again, TLRY spiking back up. Again, we know that was going to possibly happen. That little ratchet little stock. Look at NIO just dumping here on the back end of the day. It's just dumping. You know, again, so we got about, what, 8 minutes here before the bell. You know, again, we live for this, guys. We live for these moments. You know, Gov was a hard one to break today, but some of the guys waited it out. Personally, I waited it out because I knew it was going to go lower. GOV, and right now it's going lower. Finally, it took a little while for it to break down, but it's breaking down now. I got below that $12 level of resistance to the downside. If you're short, you know what I mean. When you're shorting into that resistance, the hard level of resistance there, which made for a great level of support to the upside. And it finally broke down. I know one of my buddies was trading right along with me, and he had mad shares shorting this thing. I mean, I think he had near the near what 10,000 shares short, up there near a little bit over $12 a share. Imagine that, guys, 10,000 shares short, for a $12 stock. Y'all do the math on how much that costs. That's roughly about near $120,000, position that he took, and he's looking for, anything below 12, 5 cents, 10 cents. So again, if he picked up 20 cents a share, which I see here, I hope he stayed in it and picked up that 20 cents a share, 20 cents times 10,000 shares. Y'all do the math on that real quick in your head. What's 20 cents times 10,000 shares? How much is that in profit? Right? How much you making that in profit? That's why that's why I love the stock market. Right? And that's why NIO is going lower. That's why I'm not in the rush to sell this. Like most people, man, take the profit. When you when you learn how to perfect you realize you can get to the bag. You're just trying to realize how to get the meter to move and also save on your commissions and also learn how to be an effective trader. Right? You're not doing this by happenstance. This not happening by a mistake. This ain't a mistake that you was able to be in this trade, right? Or get the meter to move in a way where you benefiting from it, exponentially. The profit is just turning over, right? Because again, you caught the right trade, you put yourself in the best position to win, and you're being rewarded by it. I mean, just simple as that. Again, simple as that. So again. And this thing's still dumping, and it want to go lower. Look at NIO, guys, just dumping out here on the back end of the day. I mean, up on that stock now, 5,000. Y'all see it right there on the screen here. That's what this trade is right here. This 5,000 here. That's that NIO. Right, that's that NIO. I got some of these ones up here too. I'm going to take profit in those in a minute. Some of these I'm not swinging. Some of them. Some of them I am. Some of them I'm going to swing into the next day because I think there's more downside on the way. Right. Again, we just talking about weakness in the market, weakness in the sector, weakness in the asset. If it's showing you that there's no news out there after hours to kind of spook out of a trade, I know the golden rule. People tell you don't supposed to hold a short overnight unless you're just really confident in it. That's the golden rule. I get it, but again, the way that I trade, I'm doing my best, providing my best level of understanding and due diligence so I can make sure I can take this trade and benefit from it. I crushed VKTX today. I crushed it long. I made like $5,000 long, and I made additional near $3,000 plus short in VKTX today. Roughly about $8,000 of that of what I have on the day, on top of others. I took some profit already in some of these stocks. Roughly up about 13,000 somewhere around there when it's all said and done. If I just took profit on everything right now, and I mean come on, man. We live for the opportunity to be able to make that kind of money. Man, best online business ever. Again, best a trader. That chart on INO just looks so beautiful. It just makes you just want to shed a tear. It make you want to shed a tear. Like, man, look at that there. Just look at that there. And they go TLRY spiking up here on the back end of the day. I had a little bit of shares left over. TLRY actually had a 153 something place. Actually, interest. I got to get out of that trade. Actually, so let me get out of the rest of that. And I was just playing with it on the back end of the day because I got my money out of it. Obviously, I got it back. Basically, I got my money back, and now it's spiking up here, going into the close here. No big deal. I'm going to get out. I should be up still, maybe like about $5 or $10 now. Actually, yeah, I'm actually down now because I was in at 153. What? 153.50 something. I think my average is in on that one. All right, so let me get out of that trade real quick here. And excuse me, what's the name going lower? NIO, excuse me. NIO is still going lower here, guys. All right, so Tilray. All right, so yeah, I had my stop loss set. I figured I had set a stop loss. Good. So I got stopped out of TLRY with a profit. I set my stop loss under my my value, like setting a trail stop basically, and I got out with a profit still. All right, and it's striking up here after I was still going more. I mean, I'm so tempted to want to swing some of this stuff short, but this stock has been murdering short sellers lately. All right, it's been murdering shorts. And I don't know if it's even worth it at this point to even fool around with it here, up here at this nosebleed section of the day. But again, I'm just so tempted because I just know how this stock trades, man. You know, I made a lot of money off of it. It burnt me a couple of times too, but I made some good money off this stock. I made some really good money off this stock too. So again, I'm not, you know, I have a problem, you know, still understanding that, you know, that there's still some good opportunity left in it too. But again, it's a very tricky stock. It's a very tricky stock. And we got about 2 minutes here, guys, before the bell. 2 minutes before the bell. 2 minutes here before the bell. So again, if you got any trades out there that you need to kind of liquidate, go ahead and make that move. Don't swing none that you don't feel comfortable swinging. Again, the goal is to make good decisions, not bad ones, and preserve your capital and your opportunity. Right. So again, just make sure you guys are aware of that. You got about 2 minutes here before the bell, about a minute and some change, actually, to be exact. Make sure you go foundate, get all your shares, you know, get all your positions cleaned up if you're gonna cover off on them. So I'm gonna cover off a lot of my positions here. Matter of fact, some of them, not all of them, some of them. All right, got about a minute and some change. All I need is about 10 seconds. I'm so swift with this stuff now. Give me about a good minute. I'll get it in. I'll get it in. All right, so let's close out that one. Let's get that one off the table. Got about a minute before the bell, guys. Again, moving quickly here. That out. Let's close out. All right, all right, all right. Actually, I'm gonna leave some of that to still. No, I'm gonna close that entire position out. Yeah, let's close that entire position out. It served its purpose. All right, it served its purpose. Let's close this one out too. All right, so take that off the table. All right, again, a few seconds here before the bell, guys. A few seconds here before the bell. All right, so there. I think those are good. There, I think I'm gonna hold that. And there goes the bell. There goes the bell, guys. There we go. As they say, back away from your pewter. All hearts and minds are fed. It's time to call it a day. All right. Great day of trading, guys. Great day of trading. Again, had a phenomenal day. Had a fun day. Had a very revealing day. Any day in the stock market, again, is fun and revealing. And it's awesome, you know, being able to be in positions to do what we do at the level that we do it. I mean, it's awesome. Again, best online business ever, investor trader, hands down, unequivocally. You know, it's an awesome process, guys. It's just awesome process. All right, so again, there we go. So let me see what we're looking like here. And the market's moving around a little bit here. After hours, I'm gonna open up my scanner here for after hours too, so we can see what's popping after hours here already. Normally it takes about 2-3 minutes for the after hour trade to start, you know, turning over here, saying what's going, you know, move, what's going to drop, what's going to do this, what's going not, whatever. All right, so we got some movement happening here already after hours. Interesting. Again, fun stuff, guys. Fun stuff. I know it sounds like I'm just, you know, babbling a little bit, but there's a method to my madness. Again, I get excited about this stuff. It's exciting. I mean, investing is exciting. It's exciting, period. I don't know how to describe it no other way. This stuff is fun, man. Enjoy it. All right, so I will reveal, actually, knowing me, again, risk taker. I had a big day. I can take a big risk here, if you want to call it that. But I'm just playing the strengths and weaknesses. So I actually took some short, a little bit more short than the TLRY here for a small swing here to tomorrow. Again, this stock, man, has been paying me well. I've won more on it than I lost. So I can afford to kind of play these extensions off this news. The stock is up $30-something on the day, roughly around about $34 a share it made today alone. That's a lot of extension on a one daily move for a stock that's highly speculative under so many different rules and avenues at this point in the game. Coming from literally $30 share about a month ago, and it's up to $155 right now a share. You know, hit a high of 155 basically, 155.10 to be exact, somewhere around there. This is awesome, guys. So again, this is why we live for this. This is why we're going to be, and I mean, we're all going to be successful at this at some point. Hey, thank you for stopping by, family. Benny Rodriguez, you already know it, family. You already know it. Anytime, you're welcome here, family. You guys are always welcome here, anytime. But again, we live for this. We live for these opportunities. We live for the moment. And again, I'm just excited for it. So I took it short. I definitely shorted that top. You weren't going to convince me not to take this thing short at the close of bell, because that's how I've been playing it for these last few days. I've been eating off of it, let it run up, take a little bit. Right before the bell rings, I see which way it's trending. If it's trending up, up until the bell. And it's, obviously like a day like today when the news came out, they got that little news that obviously, that the U.S. well, I forgot the actual news. Anyway, they got a regulatory nod in their favor to be able to transport some of their, product into the USA, basically. I'm paraphrasing. So that was good news on the stock. And it needed that because the short seller was already starting to pile into it, after it hit that 125, 127 mark. Obviously, a la me. Right, we knew that at that point the trend was going to, start reversing here, right? So, had this news not came out, we'd have probably pushed the stock down into the 100, low 100s area at this point. It would have been down trending around the low 100s area. But this news came out at the right time for the stock. They gave it a new breath, breath of life, and the stock went spiking back up. Got back up to, not only did it eclipse that 125, but it went up there and got up to like 133, 134 during pre-market alone. This stock is a wild mover, low float, heavy aggressive buying. People that's buying have a passion for the stock, not only because it's a marijuana play and they probably, consume the product or whatever the case, but it's a fun sector to be trading because, again, it seems like it's kind of anti-government reality. When you think about marijuana, it's an anti-government play. So it has a lot of kind of, personal passion affinities behind it, why people trade it. But it's a very volatile stock. It's a very, very risky play. Very risky if you don't know what you're doing. It's a very risky play. So you got to be on your Q's and your P's and Q's and trade this thing, with the utmost care and concern, because if not, it will burn you. All right, it will burn you. It got me twice today from the swing and also a short that I took early on in the day, and I set my stop loss a little too tight. And I should have set it, opened it up a little bit because I know the stock make big, wide swings and stuff like that. And I played it too tight and got burnt again. But I took it, the other two times, now here the third time seems to be a charm here. I made more out of it. I got more out of it than I lost in terms of those two swings, or the swing and then the bad trade earlier. All right. So again, that's just that. All right. So again, that's it, guys. So we had a great day, man. I mean a great day, fun day. Still watching the rain come down here. Obviously here in VA, all right, still have the, a little bit of Hurricane Florence still lingering and hanging around here in terms of the tropical storms, whatever. So I didn't get a chance to get out the door and go enjoy my afternoon, but I enjoyed hanging out with you guys all the same, which I enjoy every single day. My battle mates in the market here, the stock market that is, and in life too. I appreciate that. And I hope you guys have profitable trades too. Again, so if you got trades that you took today, don't hesitate. Post your ticker in the back chat. If you made money today in the stock market, don't definitely let the family know. We want to celebrate with you. Again, this ain't just we just watch one person. No, I want to celebrate with you. All right, I want you to feel comfortable knowing that again, we in this thing together, man. We family at this again. So I want to celebrate with you. All right, simple as that. All right, so again, I am going to get me a little quick snack here, guys. I will share my screen here. I know you guys got things to do as well. Family and friends and things to do. So if you do continue to hang out with me here, my screen will be still trading live here for my swing trades. I took some money off the table. Obviously took some profit off the table. For a lot of my positions that I did have, locked in some and left a little bit out there to keep running. Right, that's just how I get down. Right, if it's gonna keep feeding me, there's no need for me to pull away from the table. right? 350 bucks on GOV. That's what I'm talking about, overgoing. And everybody was very skeptical about that stock too. You already know what I'm talking about, overgoing. Everybody was very skeptical about trading GOV. No, I was going to do this, been spiking up, but it eventually rolled over just like we said it would. You know, my brother Bullet said it's going to roll. I was telling you I was going to roll over and go lower because I swung it anyway. I let you know I was already convicted back. I swung traded it. I already knew what the deal was. But we knew that thing was going to roll over, and it rolled over. It did exactly what we thought it was going to do. And because of that, we got rewarded for it. So kudos to you, brother Overgorn. You took that trade. You stayed, you know, diligent, and you watched it. You waited. The right moment, you know, presented itself. You pounced on it, and you benefit 350 bucks. That's what I'm talking about. Pound profit. That's why I need some sound effects. So when y'all make that money, I can let my little sound effect go off. You know, like, hey, you know, the family got paid today. Brother got to the bag today, so to speak. You know, I love that. Hey, what's going on, Eva, Monica, the beautiful Monica in the house family? Go subscribe to that sister channel right now. Anything you want to learn about financial literacy, that sister got your back and then some. Very knowledgeable sister right there. Definitely go subscribe to her channel. Understand that this is a think tank. It's a family-oriented environment over here. There's a lot of people over here with great strengths and talents and gifts, you know, and skill sets that we need to be all pulling together and learning from and benefiting from it anyway. And that's why I love what we do. And that's why I love this platform, because we get to share that with one another. So definitely, you know, link up with that sister. She definitely knows, you know, a cornucopia of information, beneficial information. Government grants, financial budgeting, she got your back. LLC, trade line, trademarks, all that kind of stuff like that, she got your back. That's why you want to link up that sister right there. Veteran of the U.S. Armed Forces. So, you know, she been down range. She know about life, basically. So again, definitely check out my sister Monica Lamb. All the family here. Again, you know how this stuff goes. We all got various skills and talents. So again, everybody has something to offer, and that's why I love what we do. All right, that's why I love what we do. You know, again, being able to benefit from that. She has a class tonight, guys. So definitely, again, that's why I say go subscribe to her channel. She's going to be talking about, you know, how to get some of the FEMA information, you know, how to use some of the, be privy to get some of the government contracts that are available out there that you can benefit from, even during these natural disasters that just happened here with Hurricane Florence. You know, and she's really, you know, again, very knowledgeable at showing you how to make that happen. You know, if you just want to, you know, get into that industry sector alone, how to get these government grants, which is free money, to be able to get, you know, get products and services and offer back to government, you know, hey, she got your back. You know, she can put you in the right lane, right? So definitely tune in to her show here tonight at 6 p.m. Definitely, if I'm around, I'm definitely going to be there and supporting that, you know, helping wherever I can too, and sharing in the wealth of that knowledge and information, and you know, with you guys to help her out, right? So definitely check her out, guys. So subscribe to her channel. All right. So that's it, guys. So what a wonderful, wonderful, wonderful day. And look at TLRY spiking up and going up and hitting new high day. I took some small shares. I already know I'm trying. I took some shares. I took a little gamble on that. This thing is spiking up here after I went up and hit a new high day and going higher. So I swung, you know, a couple hundred shares at 154. What was my average? 154. What's my average? Hold on. What is my average? 154.70. And right now I'm getting beat up bad. They think up to 157, 150, 157.91. That's why this stock is dangerous. This is exactly why this stock is dangerous. And it's not for the faint of heart or those who are not, even me. I'm not saying I'm some, you know, master controller. No, this stock is even dangerous to me. And I'm normally short, you know, trading and shorting these low floats and, you know, wild stocks when that, you know, when the right, you know, opportunity presents itself. But right now this stock is murdering me out the hours here. I mean, it's up to 157 here on the bid. You know, crazy. All right, someone call here. Okay. And that's always happens when you go live, right? Everybody's gonna call you. But anyway, so that's it, guys. So again, I'm gonna share my screen here for a little while here before I close out. You know, for the live stream go off here again. I enjoyed you guys as always, man. Power and profit to the family, power and profit to your family, you know, power and profit to your future, right? Again, we are a team at this Ubuntu I am, because we are teamwork makes the next, you know, teamwork makes the dream work, and get you a team in 2018, as my sister Monica like to say. And let's build this thing. Let's build this thing. Let's grow this thing. All right, let's get to this bag. All right. Trade station free commission for military. Yeah, trade station. Yeah, if you're military, if you're first responders, any kind of first responders, government, sometimes some government, government. I forgot what all trade stations offer. They offer veterans. They offer EMT services, and some other people. You get pretty much, you got commission free trading over that trade station, guys. If you're a first responder or military-based background, if you got a government-based background, they'll offer you commission-free trading over that trade station. Yep, you're 100% right, brother Benny Rodriguez. So anybody that has that military background, or if you're a first responder, meaning you work for a hospital as an ambulance driver or a fireman or obviously a policeman. Policeman, yeah, well, we begin with that mess with policemen right now. But yeah, if you're any of those guys, you get commission-free trading over there at trade station, right? And they're pretty much a nice little robust little trading platform. All right. So you have to worry about paying no commission like Robinhood. And it's, again, more, a bigger base platform than Robinhood. Yeah. So definitely check that out. Yeah. Sister Monica, definitely check it out. If you want to open up a brokerage account with them, and you don't have to worry about paying any kind of, again, no kind of free fees over there if you're military. Right. I think the options, even the option contracts over there at trade station are, I think they're free too. If I'm not mistaken. The option contracts are free too. I just hadn't opened up mine yet. I started the contract, just never finished it. But I need to go finish mine over there too at trade station, so I can get that benefit package too, to be able to trade it free as well. All right, to be able to trade some of those things over there free under the commission value. What I'm saying. All right, so that'll be fun and that'll be interesting. All right, so again, that's why I love the think tank. That's it. We're sharing ideas together, so we can build opportunity and share opportunity with one another. All right, so that's awesome, and that's super awesome. All right, so let's see. Okay, so you had a good day. That's Mike. Mike over there, Warrior Trader with Ross Cameron. I guess he was going over some of his trade. He made $600 today. Tim Sykes still trying to market his "Let me teach you how to be a millionaire" student course stuff. You got to pay him about 10 grand, 10, 12,000 though. Again, I ain't hating on nobody opportunity, to make money, do what they do and market and build their brand. But it definitely comes with a level of scrutiny when you're dealing with, with that guy. Because he's definitely a fire drill type of so-called teacher. He talks all kind of stuff about his students. I guess that kind of tough love scenario, that's his mindset. We're training and teaching his students, and they paying him thousands of dollars. I mean, I don't think you want to just talk people like that. They pay you, $5,000 and $10,000, thousands of dollars, and you talking to them like they're little children. I don't think that's, that's gonna cut it in the real world. So, but again, it works for him and the people that follow him for whatever reason. But whatever, there's a way to do stuff better. All right, guys. So let me just hush my mouth. Let me go put something in my mouth, some snacks. Or get me some kale chips or something. Right, and I'll share my screen again for a little while if you guys want to hang out to kind of see what the after-hour trades I got going on, what they're doing. But other than that, again, awesome day, power and profit to you all. My best to you and your families. And again, we're gonna pick this thing up, again, same time tomorrow, meaning when the bell rings, and get after this bag, right, all over again. Again, best online business ever, investor trader. Right, get excited for that. All right, so let me share my screen here. All right. And I should have had it pulled up. Let me pull up. I can do that too, at least. Pull up TOS. CNBC. Y'all know how to listen to CNBC after hours, just in case any breaking news happening about a particular stock. And you guys can kind of hear what's going on out there in the market. I love keeping CNBC around me at all times. And the kind of breaking news happening in the market. Anything with obviously Donald Trump, his crazy self, that may cause the market to kind of act retarded. It's good to kind of be well-rounded and knowing how to protect your money too, because the market can change on a dime, and it could be lights out. You get caught out there and you're not prepared, meaning you don't have any stop losses and nothing like that set. It could turn around and hurt you on the long run. All right. So again, make sure y'all guys tune in to my sister Monica show tonight. Go subscribe to her channel. She has a show tonight at 6 p.m. She's going to speak about the FEMA, FEMA help, and the values and things that come along with natural disasters, how to be able to benefit from that, what to do, what not to do, all the know-how, things of that nature. And again, she helps you get government grants too. For some of you guys that have always had ideas of getting government grants to be able to benefit or start your business up, you definitely want to link with her because she has a wealth of knowledge when it comes to those things. Know how to put you in the right direction, what paperwork to fill out, how to fill out the paperwork, how to get, score the government grant, all that. Again, that's why she's very valuable. So definitely link with that sister. And again, share other people, share the link too when you get her information. Share it because there's somebody out there that you may know that could benefit from this information. I mean, this is quality information, insider information, so to speak, quote unquote. So you can benefit from it. All right, simple as that. All right, simple as that. All right, so get excited, guys. All right, so let me cut on CNBC, and I'm going to get up and make me a little move here. Get me a little snacks up here.
If it's part of a broader strategy of net selling.
We're going to be watching this data.
And they remain a big holder for now. It's not.
And like Japan actually was a big buyer, so foreign ownership of treasuries went up. But we're going to be watching that China number, especially
at a time when we're selling a lot of them.
And we need it. We're raising a lot of debt.
China hit a 6-month low today, guys. Wow.
On a report that
they are crushing the Asian market off these tariffs. But that's why I've been trading a lot of these, ADR Asian stocks too. It's tragic. But another conversation for another day. I'll be on another tangent. Let me just be quiet. Another conversation for another day.
It was a tough day, Sarah. Take a look at shares of Tesla. We're going to show you a 3-month chart here because really we have to go back to the early August time frame.
That's right. Tesla got hammered today.
The DOJ probing Elon Musk's tweets that were sent out on August 4th. There's actually one tweet where he said he was considering taking the company private, funding secured. Tesla, after this story came out today, issued a statement saying it has received a voluntary request for documents from the DOJ.
Right.
It has been cooperative and responding to it. We have not received a
this is why I'm shorting Tesla.
Testimony or any other formal process. We respect the DOJ's desire to get information about this and believe that the matter should be quickly resolved as they review the information they have received. This coming just one day after we saw more signs of greater competition for Tesla. Audi unveiling its first electric vehicle.
Yes, I've been waiting on the Audi electric car. Porsche got one in the works too.
With delivery starting in the spring, we had the e-tron along with Jaguar's new vehicle.
Nice, it looks nice too.
Luxury EVs.
Wow.
What you have is a booming market that we're really going to see.
Price around 74,000. Not bad. The Tesla costs around over 100,000. And lower base Model 3 is around what? 50-something thousand, 60,000. And Audi got an electric base car, SUV at that for 74,000. Bruh, we might have to trade in Audi. They might be ready for upgrade. Let me get on the phone, call the Eva up. Hey, upgrade time. I mean, they're not ready now to come out, obviously, but a lot of stars coming into that electric space, man. I mean, we knew it was going to happen.
Are they spreading their bets?
We knew it was going to happen.
Changing their focus altogether?
On that matter of time, we knew it was going to happen.
I think they're spreading their bets, Will. I would not be surprised if you see them make other investments in other electric vehicle companies.
Okay, we will keep an eye out. And interesting seeing that new Audi electric vehicle as well. Attractive shape, interesting colors on show in the video we were looking at. Phil LeBeau, as always, thank you very much. Let's continue the discussion and bring up Bob Lutz.
That's why I love what we do. Investor trader, baby. Get to the news, get to the bag, get to the opportunity. Man, this TLRY is tearing it up after hours. It is beasting still. This thing up to 162. The little 200 shares just got pummeled, guys. I mean, I'm down. Oh man, I'm down about $1,200. They ain't there.
Certainly, the concern around those tweets were really about criminal activity and whether there was market manipulation. So to see involved is not a surprise at all that they're requesting documents. And there isn't something more substantial here going on just yet that we know about. I think is probably a matter of course.
The rest about $1,000 in here. I gave 1,000 back just that fast. See, that's why I say, that's why I don't recommend that for anyone that level. Yeah, I do have my own little moments for taking these kind of risque plays, but it's only based on what I feel is, you know, opportunity at some value.
I think certainly it's an overhang.
Again, so you know, I have about 13 grand, 12 grand, gave about 1,000 back so far here after hours. Good thing I got some other stocks out here still moving to help balance out a little bit. But yeah, this TLRY is on steroids, man. This stock is on steroids.
And we certainly can start looking at examples of other, big companies.
Steroids.
Where, founding CEOs and important leaders have left.
Goodness.
Stock performance after the fact. And Apple's one example when Steve Jobs left.
That's the game, though. That is the game. Again, don't hesitate, guys. Check down my description box. You kind of get an understanding of what was moving today. I also got my affiliate link down there, so guys think about getting the, think about getting a TradeNet account. I do have my affiliate link down there. It's the biggest discount that they offer. So, that's year-round for me. I get that same discount year-round for anybody that's who's signed up on the TradeNet. You guys going to get the lowest price out there, period, hands down. Facts. So definitely think about that. I got the scanner links down there, obviously Coinbase, Robinhood, and all that stuff. If you don't have those accounts, whatever, that's your choice. But never sign up to one of those type of platforms without, hitting somebody's affiliate link. So that way both you guys get something free from it. That's what it's all about. Don't just do it just because get the free stock, whatever, or get the free money. Some of them even pay out like free money, like $5 or something like that, whatever the case. All right. So again, man, this Audi looks nice. This electric Audi SUV looks nice. And they're talking about the Saudis are thinking about investing in. Well, they went another way for Tesla anyway.
95% of Americans still want. So, and Tesla has no internal combustion engine vehicles on which to recoup the EV losses. So, to me, this is just another. What's happening is what I have predicted for the last 3 years is finally coming to pass. Is everybody in the global automobile industry
is going electric.
Yeah,
of course.
High quality, high technology, high range electric vehicles.
Yeah, it was only a matter of time. Tesla was not going to be the only player in the game, to be able to just, be the only one.
No software advantage, no battery advantage.
Yeah.
No advantages whatsoever.
I agree 100%. Dude, whoever you are. Whoever this dude is, I agree with him 100%.
They're still hemorrhaging cash at a prodigious rate, and that's not going to stop. And as long as they are under federal government investigation, guess what? The SEC will not let them make a capital raise. So unless they've got some source of money somewhere, it's going to be a big problem. And I think the jaws are tightening, and I think in another year or two, we'll see a movie called Who Killed Tesla?
Wow. Woo-hoo. This dude going in on Tesla. He's going in on Tesla.
A lot of these issues about competition and even about Tesla's ability to produce the Model 3 at a decent margin at a price people want gets back to the strength of the brand and the depth of the actual the desire to own these cars, right? So I wonder if that's the thing that we're going to have to watch for. How do orders look going out a few quarters?
I don't think this is about orders. This is about cash. I think that's the right issue. And I disagree with your other guest here that they're in a position, if they're hitting 15% gross margins, to generate as much.
Well, he just a diehard Tesla fan. That's all that is. These people just love this stock because they love Elon. Ain't got nothing to do with that value that they can be cash flow positive because they haven't shown to be cash flow positive to date since they IPO. And they're saying now, okay, well, at Q3 that we may end up being cash flow positive finally. Yet they still having problems hitting their production numbers. They just had a big production number miss about what? About 3 weeks ago, somewhere around there. 2-3 weeks ago, they had another production miss at that $6,000 mark on the Model 3 numbers. They cannot seem to get out of their own way because the CEO keeps getting in the way of the company. Doing crazy stuff, smoking weed and all kind of crazy stuff. Not that has to do with anything, but it shows that his ability to govern and run his business is predicated upon him, going out there doing all the crazy stuff that affects his coworkers to make them look at him like, hey, bro, you running the company or you just do this, part time. Again, I go on for days about Tesla. Y'all know I've been trading Tesla off and on, like, religiously, literally. I know that stock, man. I know that stock. I've learned and earned right to speak about Tesla.
Just to respond to some of what Colin said after.
And Tesla is just one of those wild beast savage type stocks that, you know, again, can have a great level of, you know, optimistic growth if the CEO can get out the way and get serious about doing what he needs to do, building solid, you know, vehicles, get his numbers up, get his margin value up in terms of, because he can get these cars pumped out, and then turn profitable.
Continuing to show losses, and they will never make money on the Model 3 because the cost is way too high.
There you go. Let the guy let that go in.
People in that assembly plant producing less than 150,000 cars a year. The whole thing just doesn't compute. It's an automobile company that is headed for the graveyard, and I've predicted this for some time. I continue to predict it. And by the way, when I was CEO of Exide Technologies, the SEC had a case against the former CEO, whom the board had booted out for some illegal practices. I had to raise capital because the company, the debt to equity ratio was a disaster. Got the investment banks. We were all set to go, and the SEC said, hold on, as long as you're under federal investigation, you cannot raise capital. So I speak from experience.
That's a very interesting point he just made, guys. That means even if Elon Musk needs to raise more additional capital to get those numbers boosted up, to get that Q3 and Q4 value up, under the investigation of the Department of Justice, as long as it drags out, he cannot raise capital. That means he's going to hemorrhage more capital. But keep in mind, Tesla has some of the biggest cash burn value rate out there amongst many companies out there. I mean, it blows through cash like, I mean, man, the type of analogies I could use right now, it burns cash. Just to have the warehouse open and run, it burns a lot of cash. And if you're not profitable, that's just a lot of a mountain of debt that's just piling and compiling and building up. That's why people go hard against Tesla. Ain't so bad that we don't love technology, because this is revolutionary technology. Electric vehicle, come on, that's revolutionary. But from an investment standpoint, from just being intelligent, it's not the best investment under the parameters of the short-term entry. It's making for some great short-term, you know, to a scalp type level of investment, but not just, okay, I just park my money and just walk away. It's just too speculative right now at these levels, what I'm saying. But again, that's just my opinion. That's why Sonos was selling off today too as well, because Amazon looking to go into that space. And I love this stuff, man. Gotta love this stuff. I love this stuff.
Shows that while Amazon is behind companies like Google and Facebook and ad revenues, its ad business is growing far faster than those competitors. So disrupting the home appliance industry could end up being just one small part of Amazon's broader strategy for market share and monetization. Guys, back to you.
Didi, is there a sense that users who had previously felt, I don't want an Alexa, I don't want a listening device in my home, are softening their views towards that kind of tech intrusion? Or is it just simply that Amazon and Alexa are starting to offer more services to draw people in?
I know, it's a great question. I know I talked to a lot of people about that sense of that tension between privacy and convenience, right? And it seems like
let me open up the scanner too, so I can really show the scanner. I'm going to get my screen together here.
To get more convenience in my life, that you do have to give up some share of privacy. How much share that is, that remains to be seen. But it seems like they're just making it more and more difficult for us to live without these types of devices in our homes.
Convenience, privacy, I don't know. I think that's going to be a tough trade-off. Privacy? Privacy. Didi, thank you. Didi Roy in San Francisco. You may soon be able to use that Amazon microwave to heat up groceries from Aldi. The discount supermarket chain is expanding its Instacart same-day delivery service to 35 states just in time for Thanksgiving. Remember, Aldi is a German-owned company. It's been testing the service in just 4 cities, part of an aggressive growth plan in this country. Other grocery rivals have been struggling to compete with Amazon as well, but Aldi's mostly private label offerings have allowed it to avoid a price war. Everybody's getting into grocery delivery. Kroger's also working with Instacart. So are some of the New York chains like Fairway. You have to have a digital strategy.
And the concept of consumer surplus, where the consumers win from all this competition as opposed to any of the companies, seems like it might apply here. It's been very hard to make any money at that, except it's a lost leader for market share.
Yeah, and Aldi's draft market.
I don't know. I've had some not great Instacart experiences myself.
Well, but I'm saying they're trying. They're trying to make it better.
They are trying. All right, time now for CNBC News Update with Sue Herrera. Hi, Sue.
Hi, Sarah. Hi, everybody. Here's what's happening at this hour. Energy Secretary Rick Perry attending the 3Cs Initiative Summit in Romania. It aims to improve ties between Eastern Europe, the U.S., and the EU. He says Europe should lessen its dependence on Russian gas.
Since Russia's invasion of Crimea and the threat of a cutoff of transit in the winter of 2014, Europe's dependence on Russian gas has only been increasing, rising from 30% share to more than 40%.
Back here at home, SeaWorld and its former chief executive, James Atchison, have agreed to pay more than $5 million to settle SEC fraud charges. This for misleading investors about the negative effect that the 2013 documentary Blackfish might have on its business. And Prince William unveiling a statue of a former British spy credited with using his cover as a passport officer to save the lives of thousands of Jews from Nazi Germany. The statue of Major Frank Foley was unveiled in front of a small audience of Holocaust survivors and members of the Major's family. You are up to date. That's the news update this hour, guys. I'll send it back downtown to you.
Okay, Sue, great stuff. Thanks very much. Sue Herrera for us back at HQ.
Tesla isn't the only Elon Musk-run company in the headlines today. SpaceX just announced who will become its first private passenger to fly around the moon. They didn't listen to me and send Wilfred.
No?
They do have a name now, and we'll reveal
I'm
who
not
it is.
a billionaire, and I'm not willing to pay however much he coughed up. We don't know how much he paid.
No,
but
we know he's a billionaire.
We know he's a billionaire, and it's going to take 6 to 8 people with it. Also coming up, Iowa's Secretary of Agriculture says the trade war has cost farmers billions of dollars. We'll get his thoughts on the latest round of tariffs. Still ahead, stocks rallying despite President Trump's new tariffs on China. But up next, we'll discuss whether that could lead to trouble at the polls for Republicans in the midterm elections. Don't go anywhere. Close the bell. Back in a couple of minutes. Let's have a look how we finished the day on Wall Street. The Dow was up by 184 points. The high of the day was 249 points, so off the highs, but still a healthy 0.7% return. The S&P just behind that. The NASDAQ led the major indices. It was up 0.75%. The best performing sectors, consumer discretionary, energy, and tech within the S&P. Now, President Trump, of course, announced more tariffs earlier today, late yesterday, and he's speaking this afternoon about the topic and the escalating trade war, saying the US is willing to impose even more tariffs on China in the future.
They make a deal at some point, but right now we just imposed $200 billion at 25%. It just went on. It actually kicks in on January 1st at 25%. It starts off at 10%, but shortly thereafter goes to 25%. And if there's a retaliation against our farmers and our industrial workers, our ranchers, if any of that goes on, we're going to kick in another $257 billion. And that'll be also at 25%, which we don't want to do, but we probably will have no choice.
Laying out there the threat of more tariffs. Here to talk about the impact on new China tariffs, both on the ground for farmers and manufacturers, as well as in Washington. Libby Cantrell, head of public policy at PIMCO. Mike Naig, Iowa Secretary for Agriculture. So, Secretary Naig, you heard the president saying if China retaliates against our ranchers and farmers, there will be more tariffs. Do you support, and do your members of your farming community support the president's actions, or is it hurting the wallets?
Well, it's as we head into the 2018 harvest season for corn and soybean out here in Iowa, this escalation of the trade conflict really couldn't come at a worse time. So it is impacting our markets, and that's impacting our farmers. So our farmers understand that there are issues that need to be resolved, particularly with China. But there is no doubt that the retaliatory tariffs are impacting our marketplace, and that's impacting our producers negatively.
Maybe I shouldn't have framed it as an or. Are they still going to vote Republican in the midterm and support President Trump?
Well, I mean, there's a lot that goes into that. I think issues that ultimately impact the economics of Iowa and impact farmers' pocketbooks will impact the politics. But it's not as simple as just this one issue. Farmers are encouraged by the tax reform. They're encouraged by progress on regulatory relief, and so there's more to it than just the trade picture, but it is an important issue that absolutely will impact their pocketbooks.
Libby, when we consider the reaction by markets today to the latest sort of escalation, clearly it was a positive response by markets. What do you put that down to? Was this escalation less than what people were expecting?
Yeah, well, look, I mean, I think people were likely expecting the 25% rate, and so the fact that they got the 10% rate. And we were talking about earlier, though, I mean, I was personally a little bit befuddled by the reaction because, you know, not only is the president going to go through with the tariffs, but he alluded to future tariffs, tariffs on all Chinese goods. And so that would be, you know, invariably would hit the consumer, invariably would hit growth, and would likely be, you know, negative for markets.
And I guess one of the things that I think investors have struggled with is there doesn't seem to be a process that they're kind of looking at and trying to benchmark against expectations and what's the next point of negotiation. Is that going to develop here? We're talking about some meetings later this month.
Yeah, I think that, I mean, look, there were some meetings that were tentatively scheduled for the end of the month. It's unclear whether the Chinese are willing to go through with those at this point. There is a potential off-ramp in the G20 summit, the Leaders Summit at the end of November. And I think that if the optimists are going to look at that to say that could be a potential off-ramp, I think we're a little bit more skeptical of that. And the reason is that because what the administration is asking from the Chinese are significant concessions to basically their China 2025 industrial growth model. And if it were just a question of buying more LNG or buying more soybeans, I think the Chinese would be ready to deal. But we are asking them to make pretty big concessions, and I just don't think they're there, at least at this point.
Secretary Naig, how big of a market is China for your community?
Well, for China, the top issue that we talk about is soybean production here, and so roughly 1/3 of our soybeans go to China. So it's a significant impact on that soybean.
GOB soybeans, they make plastic with that mess. Lyrically, y'all be eating those soybeans. It's high in phytoestrogen, and it gives boys breasts, and it makes women act bushy. That's
encourage, and would that offset the kind of negative rhetoric and escalating trade tariffs with China?
Absolutely, and there's definitely folks who appreciate the fact that we seem to be making some progress here with NAFTA. We really do need in Iowa, Canada and Mexico are our #1 and #2 trading partners, and so securing NAFTA 2.0 would be a significant step in the right direction for Iowa. And then if we can carry that momentum into China, but also beyond that, and re-engaging with some countries and expanding markets that were involved in the TPP agreement, Japan, Vietnam, South Korea, those would all be positive things too. So our farmers are looking for the administration to really play offense on trade as well.
Is there any way, Libby, at this point to put a GDP estimate on how much this is going to hurt U.S. or China?
Well, look, I think for the U.S. and we've been working on this internally. I think for the U.S. For 2019, that's when you'd really see the impact, especially if you saw the tariffs on all of the Chinese imports. I mean, you're talking about potentially 50 basis points, 60 basis points of a headwind to growth in 2019. So not insignificant when you're talking about sort of 2.5–3% real GDP growth.
0.5% to a full percent.
Potentially, yeah.
Thank you, Libby Cantrell, Mike Ney, for joining us there from Iowa. Move over, Neil Armstrong. The Cosmos has a new first. SpaceX has booked the first private passenger on a voyage around the moon. But he's looking to bring some people with him. Are you interested? We'll have the details straight ahead.
Welcome back. SpaceX has its man for the moon. The first private passenger for a lunar trip has been booked, and Morgan Brennan joins us now with all the details. Hey, Morgan.
Hey guys, that's right. So Elon Musk is unveiling the identity of the first private passenger SpaceX plans to fly around the moon. It's Japanese billionaire Yusaku Maezawa. The plan, SpaceX is still under development, Big Falcon rocket, the BFR, and its accompanying BFS capsule to carry out this mission in, if all goes according to plan, 2023. Maezawa, who made his billions creating Start Today, which owns Japan's largest online fashion retailer, ZoZoTown, is also an avid art collector, and he says he does not want to make the 4 to 5 day journey alone, adding that he will invite 6 to 8 artists to join him on this mission.
This project is very meaningful I thought long and hard about how valuable it would be become the first private passenger to go to the moon. At the same time, I thought about how I can give back to the world and how this can contribute to world peace. This is my lifelong dream.
Now, he approached SpaceX. This is called #DearMoon. You can think of it as an intergalactic art project. And Maezawa bought all of the seats on the spacecraft, price undisclosed, but Musk did describe this as a, quote, non-trivial amount that will have a material impact on the BFR program. So, in other words, that's going to help bankroll the rocket and the capsule's development, which Musk also says could, quote, likely cost about $5 billion. Now, if you're also wondering whether Musk is going to join him on this trip, that question was raised last night at this event in Hawthorne, California, and he said, maybe we'll both be on it. Maezawa did invite him.
No answer. Do you know what the Zozo suit is? Do you guys know what that is? It's what Zozo Town makes, these like skin tight suits. They kind of look like they're going to the moon, like space astronaut suits or something. Anyway, would you take a trip to the moon with SpaceX? We took to the streets to find out.
I think it's an awesome concept. I don't think I would do it because I'm not that adventurous, but I think it would be great for someone with an adventurous spirit.
A sightseeing trip around the moon will be boring. It seems to me if there's technology that allows me to fly around the moon, then let me fly around Mars or about interstellar travel.
I think I'd like to see the Hyperloop built first before signing up to ride on his spaceship to the moon.
Money's a factor for me. There's no amount of money that I would miss my grandchildren if I didn't make it back.
What does it cost to send someone into space? So, I pay $1.
I don't know if the general public's there yet.
He was demanding, that last guy. But
I remember talking to Neil deGrasse Tyson, and he was saying that space tourism is the next frontier. It's what's going to drive so much investment into space, no matter what.
And a little bit of misapprehension about how far the moon is relative to Mars. But I mean, we showed that schematic, right?
Yeah.
This flight plan exists somewhere, right?
It does. I think it's about 240,000 miles all in. You get as close as 125 miles from the lunar surface. I mean, they're legit laying this out and planning on this. The key question is going to be, they're developing a new rocket to do it. As we've seen in the past, space is hard, and can they actually hit those target dates? Probably not, but we'll see, maybe.
But Morgan, he has not picked his artist though.
No.
So we should maybe pick up a paintbrush and start getting into that as a hobby, and who knows? Maybe you'll be a good enough artist.
Yeah, we could do paint. I'll do paint by numbers, and maybe bedazzling is an art.
Small chance.
I don't know. I'll just go to a Southeast Asian beach or something.
What?
Before the moon. I would totally go.
Anyway, Morgan, thank you very much for that. Now, $1 billion, that's the estimate for the price of tariffs on the housing sector in the wake of the current trade war. We'll go behind the numbers, what it means for your housing plans next.
The latest read on home builder sentiment is in, and while the numbers are pretty positive, there are some concerns lurking below the surface. CNBC's Diana Olick is in Washington with the story. Hi, Diana.
Hi, Sarah. Homebuilder sentiment in September held steady at 67 on the NAHB's index. Anything above 50 is considered positive. The street, though, was expecting a 1-point drop. Now, sentiment is up from a year ago, but down from its most recent high of 70 in May. The survey was conducted just as the threat of new tariffs on Chinese products was rising. That concern is now a reality and has builders faced with even higher costs. Of the 5,700 products listed in the latest tariffs from the Trump administration, a preliminary look by the NAHB found about 600 products either connected to home construction or to tools used to build apartments or homes. Now that represents $10 billion in goods, which at a 10% tariff rate puts a $1 billion tariff on housing. This includes appliances and other kinds of home furnishing products. So not great news for the housing market. Wilfred?
Certainly not, Diana. Thank you very much for bringing that to us. Now, the First National Bank of Amazon, that may not be the name of the tech giant's potential bank, but its prime members are ready to open accounts. The details next.
So would you be willing to bank with Amazon? Well, 65% of Amazon Prime customers said they would be willing to sign up for a free online Amazon bank account. According to a recent study by Bain & Company, 43% of non-Prime Amazon customers said they'd be willing to try the account. Back in March, the Wall Street Journal reported Amazon was in talks with banks like JP Morgan and Capital One to create a checking account-like product for its customers. I think it speaks to the fact that consumers really love and trust Amazon, right?
Yeah, a lot of your economic life is there already. I think that the question in the survey, though, was if it was a 2% cash back type account, it sounds like a pretty good deal.
Yeah, clearly they already have credit cards, Amazon branded credit cards. I think a checking account is a big step further, and clearly people want to be able to trust that their money's safe. You know, Amazon on the valuation it's on, the cash flow it's on, that's a big question. I think it would need a partnership that we're talking about as well, a partnership with the bank.
Amazon and JPM are already working together on healthcare and other things.
Yeah, and they've got a credit card as well. Anyway, that does it for Closing Bell today. Thanks for watching.
Fast Money starts right now.
Thanks. Fast Money starts right now, live from the NASDAQ market site overlooking New York's Times Square. I'm Scott Wapner. Our traders on the desk tonight: Tim Seymour, Brian Kelly, Steve Grasso, and Guy Adami. And tonight on Fast, more trouble for Tesla. The Department of Justice now probing CEO Elon Musk's tweets about taking the company private. We'll tell you what it all means for the stock, which was down today. Plus, the reviews are in for the latest crop of iPhones. You won't believe what people are saying either. We'll have the phones here live on the set, and we'll do a Fast Money test as well. But first, we start with the escalating trade war as the U.S. and China continue to go head-to-head. The president making comments earlier today, capping a busy day of trade headlines. Let's go out to Eamon Jabbers in D.C. for those details. Eamon.
Yeah, Scott, that's right. The administration broadly defending the president's approach here in terms of the tariffs on China that he announced last night. Wilbur Ross was on CNBC earlier today, and he said ultimately he believes that the United States has the upper hand in this negotiation. Here's what he said.
China doesn't have enough imports from us to make a reciprocal tax. China, we sell them less than 150 billion a year. So in that sense, they're out of bullets.
At a press conference later in the day at the East Room here at the White House, the president talked about his approach broadly to this trade issue. He said, ultimately, the American public has been paying the price for what he framed as decades of mismanagement by American politicians and American presidents who preceded him. Here's what he said.
We are the piggy bank to the world. We've been ripped off by China. We've been ripped off by, excuse me, Mr. President, the European Union, of which you're a part of. We've been ripped off by everybody. And I want to protect the American worker, the American farmer, the ranchers, the companies. And we're not being ripped off, you will see in a little while.
No indication from the president or anybody else here at the White House today as to whether or not the U.S. is going to automatically respond to the Chinese retaliation that was announced this morning. In the president's announcement yesterday, he said the United States would automatically follow up on any Chinese retaliation with additional tariffs of the U.S. on the part of the U.S. of up to $267 billion of tariffs on additional goods coming from China. That would be pretty much every export from China to the United States that would be facing tariffs in that situation. It's assumed here in Washington that the president, when he says automatic, he means automatic, and that's coming as well. But we'll wait and see for that, Scott.
Sure will. Eamon, thanks so much. Eamon Jabbers, North Lawn of the White House this evening. Despite the trade war, the Dow staged quite the rally today, surging at one point more than 250 points as consumer discretionary and industrials, which are most sensitive to trade fears, leading the way. Guy, I guess it's what trade war? You look at the market today, market doesn't seem to care.
I think it's what Steve alluded to last night in terms of the 10% versus 25% and what a difference a day makes. I take a little umbrage with what Mr. Ross said. I don't think the Chinese are out of bullets. I think they have a number of bullets, not least of which they could devalue their currency and we back to square zero. I'm not saying they're going to do that, but they definitely still have bullets in the gun. With that said, I mean, what the markets continues to tell you is they do think that there's going to be some sort of not reconciliation, but they'll come to some sort of agreement and everything will be fine. I'm not certain that is the case. What I will say, and we talked about this last week, for whatever reason, all of a sudden, steel stocks seem to be getting their footing. We mentioned Cleveland-Cliffs last week. With the rest of the steel sector lower, that's been going higher. Up again today, almost 4%, as was U.S. Steel. So there have been things that are starting to show some rays of hope, and it comes in the form, in my opinion, of steel stocks and a lot of these pharmaceutical stocks that continue just to grind higher.
Well, listen, I mean, the market clearly said today, in markets, perception is reality. And the perception is we're closer to the end of this trade war than the beginning of this trade war. And that's what the markets are telling you today. To Steve's point, 10%, wasn't as much as 25%. We have the headline up saying the trade war escalates. The market's saying today was a de-escalation. I don't know if it's going to be right in 3 months, but for today, it appears to be the right one.
Goldman thinks that it's going to get worse. Are we too
I agree with Goldman. No, come on, guys. I mean, I agree with Guy. First of all, I think they do have other goals. Guy's pointed out pretty much every time we talk that the Chinese are in this for the long haul. I would argue, first of all, the data came out. China's been a net seller of treasuries 4 out of the last 5 months. Again, not in their best interest to dump treasuries, but I think they're in a position to play not only a longer game, but as I will continue to say, this is not your father's trade war.
So why is
all about China 2025?
Why hasn't the market reacted to it though? So you have to trade the market that's in front of you. I would think that the market has made up its mind that the U.S. does have more leverage than the Chinese
for the moment,
for today. Right. Yeah, but to today's point, I think we're closer to the end. So Guy mentioned.
So the market is at all-time highs. The market has totally outperformed the rest of the world. You're seeing actually global indicators which indicate the trade war is having a major effect. If it has a major effect on the globe, it does have an effect on us. And we've been so long since we've gotten back to the market revenues from the S&P that are international.
The market is a forward-looking mechanism, and it doesn't see headwinds for the United States market. It's always about 6 to 8 months ahead.
It's absolutely fair to say that here we are right near the highs, and the market is certainly looking at growth in tech and defensive sectors, and that the rest of the world has been an aberration.
Look,
I don't think that continues. And by the way, I also think
tech is underperformed, and the market has done the heavy lifting outside of that. So there's been other triggers that have pushed this market higher, and you don't see people diving into emerging markets even with their underperformance.
I don't think we're going to know for a while. I mean, you get Polaris, Macy's, FedEx. There were a handful of others today that are the CEOs talking about.
Even if they do come out,
it's all about earnings. This is still about earnings and the fundamental backdrop in the USA market, and it's still positive. And trust me, these politicians are doing their own polling going into midterm elections. This is still resonating with the voter.
But it comes down to whether or not investors think this is a permanent issue or is it temporary? And I'm just saying today, investors are saying they think this is temporary. So even if we get earnings reports that come out and say trade war is hurting us, as long as investors believe that this is a one-quarter phenomenon, and let's call it January, February, things are going to be better, then you're going to be okay. If it doesn't, if it goes on and it escalates and they devalue and they sell treasuries, then we've got a real problem.
There's no reason to really believe that the Chinese are going to come to the table ahead of the midterm elections.
I don't believe it, and I've said it before. I'm not suggesting I'm right. In my opinion, I don't see any reason for them to. Given what's going on in the country right now, if they've waited this long, why would the Chinese come to the table?
If he does something behind the scenes to just play the olive branch. He talks tough on television, but what happens if there's something behind the scenes where he's offering them a more enticing deal, more incentivize the Chinese to come to that table?
By the way, if we continue to get this kind of a move in markets, and actually the dollar that weakens, that puts the Fed more in play than less. And that is something that I don't think we're acknowledging. I think the Fed will go in December, and I think they're probably going to go 3 more times. We think we know where terminal rates are going to be. But if you look at the dynamics here, I think the market is not pricing in enough risk. And the fact that we've got a VIX now at 12, or at least with a 12 handle, that doesn't, today, I don't feel like running into the market saying, oh, wow, fresh highs on the S&P because we didn't respond poorly to trade this.
Yeah, it's pretty remarkable when you think about it. You go, you get this announcement. You have tough talk. The president was in the Oval Office sitting next to the Polish president today and said if China continues to retaliate, then they're going to do the 267 billion additional, right? You get this tough rhetoric, this bluster. I don't know whatever you want to call it. And the Dow only goes up.
Right.
The Dow goes.
But even the retaliation, do you remember when we talked about this a couple of months ago? The retaliation from the Chinese government was supposed to be 5, 10, 25, or 30% retaliation. Now they're only saying 5 or 10. So they're all backing off what they initially said.
All right, well, as we said at the top, industrial stocks were strong all day. It's the best performing sector this month. Names like Caterpillar, Lockheed Martin, United Technologies, and Boeing leading the way. And our next guest says there are 3 industrial stocks to buy right now. Let's go off the charts with Todd Gordon of TradingAnalysis.com. Hey, Todd.
Hey, Scott. How you doing? First, let's take a look at the XLI. This is the sector SPDR that tracks the industrials. And as you can see from a technical point of view, since 2011, we're in a beautiful parallel channel here. There is just no reason to fight this trend at this point. Moreover, where will we start to run into technical resistance? We have more upside to go. We're kind of range bound just inside of this little little channel here, so we're neither overbought nor oversold. Within the makeup of the XLI, there's three main industry groups we want to take a look at. The railroads, they're going to be defense, and industrial conglomerates. And the one thing that I would mention here is those conglomerates have been very, very weak. GE and 3M have been underperforming. If you take those out, industrials, I think, would be a lot stronger. As I mentioned, defense, very strong. Boeing is in a beautiful, just kind of sideways pennant here. It's caught between a ceiling and a floor. At some point, the trend that was in place prior should break out. Boeing looks wonderful. You take a look at Raytheon, broke to new highs today. Boeing, I think, will follow suit. Next one here is Lockheed Martin. Not as strong as Raytheon and Boeing, but you can see we have a nice classic inverse head and shoulders here. So you've got a low, a lower low, a higher low. Shorts are caught. They're panic buying. They're starting to get on their horse. Buyers are coming in. Momentum, guys. No reason we shouldn't go up and retest that 360. You get my point. Finally, let's take a look at a rail. CSX, again, kind of looking like that XLI, a long-term parallel up channel here. A view. Come on, trend lines. CSX is very much starting to move towards the upper end. You might have another $10, $20 in CSX. You take a look at Union Pacific, UNP broke the new highs. This is kind of a catch-up trade, so I think you focus in on the rails and the defense within the industrials.
You got a question?
Quick question would be, I think, Tom, a lot of these things you're looking at, this sort of you overlay an S&P chart looks exactly the same. Yes, a bit of a sell-off, starting to test all-time highs. You're going to see the commensurate move in the S&P 500.
You know what, guy? You reminded me. I kind of blew the segment here. Below there was a ratio chart of. I'm just kidding. Full transparency, right? There's a ratio of the industrials to SPX guy, and what you're seeing is there was underperformance of XLI relative to the S&P. But we started to do kind of a hook bottom here in the last month. As Scott mentioned at the top, XLI starting to outperform on a relative basis. So there's this quantitative evidence that industrials are coming on here.
Tim's going to try and save the segment.
I mean, I tell you, I wouldn't say you blew it, but just it was a small miscue. So that's
I say you blew it.
Industrials, though, why are people? You're showing me this chart, and yet we feel like the industrials have been under so much pressure from the trade war. Talk about that.
Well, again, I mean, maybe BK said it. Maybe the markets are discounting that perhaps we're going to win the trade war. Maybe they're pushing China to become more of a consumer base rather than be an export technology-based nation. Maybe they're going to be markets are discounting that they're going to be a consumer demand-based economy and start consuming some of the world's goods and services. I'm not sure. I keep it simple. I'm a simple-minded technician following these trends and these lines. And so far, this market just looks like it wants to point higher.
Yeah, Don, thank you.
Thanks, guys.
All right. I didn't even know he blew it.
No one
would have known he blew it. Biggest mistake was admitting he blew it.
Yeah. Never let him know that you blew it. I mean, as a musician, you never stop. You never tell me.
All right. Industrials this month. Cat 7%, Lockheed 7%, United Tech 6%, Boeing 5%. Does this continue? Or is it going to run out?
I would think that, to Tim's point where he just said that everyone thinks that they should be under pressure, or they are under pressure and everyone talks about it. What happens if everyone got so short all of these industrial names against their long techs positions, and now that unwind is taking place right now? So I think you're seeing guys cover in the industrial space because the trade war fell a little flat.
Well, also look at what Simple Todd put up there. He put up a lot of the defense sectors. And we know today that we have a bill that's going to increase military spending. That'll likely continue into next year. So now you have, in this particular sector, trade war de-escalation, as well as an increase in defense spending. So I actually do think you stick with the defense names, Boeing, Lockheed, Raytheon.
I don't know. You guys are saying that the trade war is de-escalating on the day where we put these tariffs on and we're threatening.
I'm saying the market told us that today.
The market told us today. That's great.
The market is smarter than all of us individuals.
It went up the Dow went up 250 one day.
What should it do? Would you feel better if it went down? And then what?
I wouldn't be right if it went down.
Here's my view on this. Let's talk about the because they are certainly coincident into where we are seeing growth in GDP. We've actually had some headwinds to the housing sector, and yet these guys continue to crush it. I think there's a lot of growth that's priced into a big part of the industrial economy, and therefore that concerns me because to me, there's no way we haven't fast-forwarded growth into this economy. I think the trade war, there's no way we're going to have felt this. As much as the market's a forward-looking indicator, the economics aren't going to be weaker until we get towards the end of the year, and the market will price that in before that. So I don't think you need to chase rails here. I wouldn't be chasing industrials.
The only one I look at in terms of I think you still can't chase is Kansas City Southern and Caterpillar. If you go back to the end of July when they reported additional $10 billion stock buyback on valuation and the way it sort of defended the lows that it recently made, I think the most interesting one out of all the ones that, what'd you call him, Simple Todd?
Yeah, why Simple Todd? Yeah.
Why Simple?
Because he said he's a simple guy. He's a simple technician.
You picked up
Simple
on
Todd, yeah.
Simple in that regard, but he's far more complex in real life. Not at all. I thought he did a wonderful job.
Simplicity is complexity.
Yeah, I hope good point. I think Canada goes higher.
All right, coming up. Shares of Tesla getting slammed today as the DOJ now looking into Elon Musk's tweet. Is a criminal probe coming, and what could that mean for the stock? Plus, we got our hands on 2 new iPhones Apple just released last week. We're putting them to the ultimate fast money test tonight. You won't want to miss that. And later, it is the stock captivating Wall Street and Main Street. Hot stock Tilray. Jim Cramer just sat down with the CEO. We'll tell you what he said about his stock's parabolic rise. We are live from Times Square in New York City. There is much more fast money next. Welcome back to Fast Money. Just when you thought the worst was behind Tesla, the Justice Department now looking into Elon Musk's tweets about the company. Phil LeBeau breaking it down from Burlingame, California. Phil?
Yeah, Scott, it's unclear how intense this investigation is by the Department of Justice as it looks into the tweet that Elon Musk sent out in early August regarding the possibility of taking Tesla private. There were some reports earlier in the day that this is a criminal probe. We've been unable to confirm that, but here's what we do know, with Tesla confirming that, yes, it has been in touch with the Department of Justice. The focus of what the Department of Justice is asking questions about is the take private tweet that was sent in early August. Tesla says it has sent in documents that were requested by the Department of Justice. In the statement, Tesla says, we received a voluntary request for documents from the DOJ, and we have been cooperating in responding to it. We have not received a subpoena, request for testimony, or any other formal process. We respect the DOJ's desire to get information about this and believe that the matter should be quickly resolved as they review the information they have received. While it's unclear whether or not this probe is a huge issue for Tesla and for Elon Musk, it did put shares of Tesla under pressure today. Remember, Tesla is also under an SEC investigation as the SEC looks into the tweet that Elon Musk sent out on August 4th, where he said he was considering taking the company private. That, of course, sent shares moving higher, and eventually those shares came back when Elon Musk and Tesla's board said they would not consider going private. Scott, back to you.
Okay, Phil, thank you very much. Phil LeBeau joining us there from California. What do you guys do with this, right? Simultaneous probes, DOJ, SEC. Does it make the stock a no-touch to get a little more clarity?
It makes it, it's another distraction for Tesla, and it makes it untradeable at this point in time. Unfortunately, because I think in the long run, I love Tesla, but here, I wouldn't touch it. We don't know what's going to happen tomorrow. They just need to focus on making cars. If they can do that, maybe get investors.
Yeah, I mean, I think this is the least of the problems. I realize that the headlines, and I realize Elon Musk has been definitely not giving shareholders a lot of comfort, but the issues really come around the delivery schedule, that we're actually getting up to another quarter end. We have earnings around the corner.
I don't think that even matters anymore.
Of course they matter.
I don't think it even matters anymore. When you have this type of investigation, the top 10 holders have a fiduciary responsibility. They can't be involved in this stuff. They have to lighten up on a lot of these plays. Plus, if he's removed, I don't know, maybe if he's removed or barred, maybe it's a positive for the stock. I'm not sure.
I don't think so.
So if it's not, then it's
Tesla is
you can't touch it. You can't touch it now during the investigation. If you think it's a negative, then
let me just throw this at you. I remember a company very well called Herbalife that had a DOJ and SEC investigation going on at the very same time. When that news broke, the stock went down. Things looked pretty dire. I think we all know how that movie ended. Right? If you're a believer in the long term of the company, why don't you use this as a buy?
That's fine, except for has the stock really sold off on those concerns? No, we've got 3 or 4% today. Maybe you could say 5% total. That's not the issue with Tesla. The issue is you have a CEO who's a visionary who seems unhinged. You've got a company that can never hit deliveries, and you've got a massive competitive landscape that slowly, the pocket is collapsing around them.
So that's our other pockets. Tim has mentioned competition for a while, and I have discounted that. But actually, you're starting to see Audi come out with commercials. Jim Cramer, I think, on Monday said competition was a factor. So Tim's been spot on this. Look, again, I'll say it for the 100th time. When they said funding secured at 375, I thought for sure the stock was headed beeline to 420. I was wrong. But the fact that it bounced off 280 and here we are again indicates to me maybe there is further downside.
What if someone buys Tesla? Anybody gaming that out? Anybody gaming that? I don't know.
Hey,
there's any number of companies out there that might be interested.
I think it would be a big gulp, and how you're going to integrate Musk into another company.
Well, it rallied because that's why I rallied on the fake tweet.
So, yeah, but it's different between him taking a private and another company buying it. That's a very different integration.
I'm not talking about somebody else.
Just to go back to the stuff that Steve's talking about, this is the most shorted security by concentration of clients at any prime broker you're going to ask right now. So there's no question that this stock, and yesterday, even for a stock that's most shorted, yesterday was the 4th most shorted. I was just checking some of the stats that I get from brokers. Yesterday, it tells you that the pressure is probably increasing on a stock. If you've got a whiff that there's a takeout, these guys will run to cover. But the biggest issue here is that this is a company that has to deliver on fundamentals, and the stock trades at something that fundamentally makes no sense. All right.
Yeah. To your point, the stock is ripe for a battle of the billionaires, which I think you know a little about.
We'll see.
Yeah.
Oh, well, kind of happened already.
You see what I did? The Herbalife Battle of the Billionaires. Was there a book on that or something?
I gotta wear a cowboy hat.
There was a book written about that.
All right, for more on Musk, please head over to CNBC.com. There's a great story on Tesla there as we speak. There it is. Meantime, here's what else is coming up on Fast.
No, it's just shares of hot pot stock Tilray, which is now worth more than 126 companies in the S&P. And after you hear what the CEO just told Cramer, you'll understand why. Did you see that? It's the small difference that might explain why Apple stock is surging. And we'll tell you what that is when Fast Money returns.
Welcome back to Fast Money. First wave of reviews rolling in now on Apple's new iPhone. So how is the tech community responding to the latest upgrade? Our Josh Lipton live in San Francisco right now with those details. Hey, Josh.
Scott, the reviews are in for these new iPhones. Let's run through some of the highlights. The Verge's Nelly Patel saying Apple's iPhone XS and XS Max smoothed out, solid updates to a winning formula, he says. US Today's Ed Beige telling his readers these two new iPhones are the best Apple has ever made. As for if the cost justifies the expense, Beige writes, well, maybe you should wait until the iPhone XR appears next month. The Journal's Joanna Stern echoing that theme. Sit tight for the iPhone XR, she says, that the new iPhones are great, but that the XR due out in October, remember, sounds more like a great deal in her opinion. For his part, Brian Chen of the New York Times, though, writing, bigger is now definitely better, acknowledging the price tags of these new smartphones, but emphasizing that their cameras and screens make them worth the high prices. Financial analysts now taking their best guesses about the mix of iPhones in the quarters ahead and what that then means for average selling prices. In a note today, RBC saying if the relatively cheaper XR is the big seller, ASPs could grow low single digits to $820, but if the iPhone XS Max is the best seller, then RBC says ASPs could approach $900. Scott, back to you.
All right, Josh, thanks so much. So, are the new iPhones worth the hype? Let's bring in CNBC.com's tech product editor, Todd Hazelton, who has the new phones. With him, you saw the report. You've got the phones. What do you say?
I said they're the best phones you can buy right now. Best iPhones, obviously, no surprise there. But I also agree with pretty much all those headlines there. I think everybody should wait to see what the XR offers in October. It launches in October for $749. These, on the other hand, are $1,000 and $1,099. Once you start packing in all the storage, that goes up to $1,449. So they're not cheap, but they are amazing. They've got the strongest glass Apple's ever put in the phones, more water resistant than ever. I threw in the pond back at headquarters, which is pretty fun. It can go up to 6 feet of water for 30 minutes. It's got new signals, so gigabit LTE, which is faster data than even the iPhone X last year. And it also has something business users will probably care about, dual SIM. So if you're going abroad, going to Europe, you can pack a SIM card, pop it in when you get there, leave them both in, come back to the United States and just use your American SIM, which is pretty cool.
Oh, interesting. Everybody here have the iPhone or no? Anybody order one of these new phones?
No. I have the 10 already. Yeah. So, all right. So if you've got the 10 already, I don't think you need to upgrade, which is one of my points I make. But if you've got something like an iPhone 8, which also came out last year, it's worth the upgrade because you're moving towards where Apple's going, right? So there's no more home buttons, Face ID, which I think we'll eventually see in iPad.
Even for you, Brian. Even for me, that's all right. Why do you think, though, I believe you think this is the next upgrade cycle that you're going to miss. So what is coming down the pike, so to speak, that you think is going to make us all upgrade?
As in, like, next year? Yeah. I don't know what Apple's going to do for next year, but I think...
But you say the R, though, is good enough.
Right, and that's next month.
That's the one what did you say, 720?
RBC was talking about $749. $749. That's the mass market, I think, for this year. And I think it has a 6.1-inch screen, so it's right between these. It has aluminum, so it's a little more cheaper than the steel. I think that's the one that a lot of people are going to like. But
Todd, does this, extending Steve's question, does this change the game for people that were on the fence right now versus the 8? I mean, is this noticeably different to the tech community?
Yes, versus the 8, absolutely. Everything's upgraded over the 8. The camera, the screen, especially the new OLED display that we saw on the iPhone X last year, people love it. Better speakers, literally everything. In fact, I was talking to Apple about it, and they were like, it's a huge upgrade. And I was like, we just launched that last year. Don't you feel like maybe customers that bought it a year later might be a little upset? But
I think that's where the iPhone XR comes in. It's a little more affordable if you want to get it.
A big question, obviously, on everyone's mind is should I upgrade? So we sent Tim out to conduct our own Fast Money iPhone test. Here's how it works. We'll show a set of identical photos, one taken with the 8, another with the new iPhone XS, and then we're going to guess which one was shot with the new iPhone. Let's put the first one up, and let's, there you go. That's Timmy Seymour. There you go.
It's like my blue steel shot right there.
That's out in Times Square. So which one is shot with the new iPhone?
I would say it's me on the left. So camera left.
Is it fair for you even to answer?
I don't know.
I mean, that's like
guy.
What should be excluded from?
What do you think, Guy?
With the one with the more vivid blue in your eyes and in your coat pocket there.
The new one was on the right.
Really?
The new one was on the right.
Wait, let me guess. I get that wrong. On the right.
Go ahead.
Don't we have a funny graphic or something? There should be a game or a graphic.
Why? Please. The shadows. See how it's really dark. His coat was really dark on the left-hand side. On the right, it was clear. And that's because they increased the pixel size on the new cameras. And so you get more light inside the camera. So it actually is cleaner.
I mean, it seems to me like it's a millennial upgrade. So they should take pictures of avocado toast and see how that works. Might be the best test.
All right, let's throw up the next one. We throw up the next one?
Well, now we know how to play the game.
There we go. Now he needs a cup of coffee. All right, so which one is with the new iPhone?
Now the duller one, the less vivid one.
Yeah, the one on the right.
On the right.
Well, it's in the teleprompter, so all of you.
Oh, come on, cheat like that.
I can't see the teleprompter.
Yes, it was the one on the right again.
That's obvious, guys.
I switched it up this time, right? All right, and finally, the rain didn't get to Tim today. There he is taking. There he is. That's video now, obviously. Which one is with the new phone?
Oh, did you tell your wife and kids to leave the house tonight? Just in case.
Which one? Yeah,
You were scared I was going to fall. Which one?
I'm going left. I think left.
All right, it is left.
There you go.
It is left. The XS on the left.
Kelly's
Enough of a difference to make you want to buy the phone? That's the question.
I want to buy Tim another pair of pants. What is he wearing? All right. Get that hat on
Better umbrella, that's for sure. I mean, that was outside of the fact that our good friends at the NASDAQ loaned that to me. So thank you, NASDAQ.
Todd, thank you, by the way.
Thank you for having.
All right, Todd Hazelton bringing us the phones. You guys want to trade it? Let's trade it. Anybody not own Apple on the desk?
I don't know that.
The phone or the stock?
The stock doesn't interest me. To me, Apple is.
Is that code word for I missed it?
No, well,
Yeah, it sounds like it.
if you want to say that. But to me, it's more like a utility.
Well, I mean,
no, it's more like a utility where you're going to get these steady returns. BK likes
It's up 29%. Does that sound like utility? I understand, Bitcoin guy. I get it. It's not 1,000.
29%. That's like
it's up 29%. It's about ASP's average selling price. I think that ultimately average selling price is going higher no matter what happens in Apple, and services is going higher as well.
All right, check out the Kramer Cam. The madman himself is sitting down with the CEO of Tilray as we speak to talk about the pot stock's parabolic rise. We'll tell you what he said, and we'll do that right after the break. Plus, Wall Street is back. Bankers getting paid the most since the financial crisis. Shareholders, not so much. We'll explain what's behind the strange divergence. There's much more Fast Money next. fast. Check out shares of Tilray. Parabolic move today. The company announcing it will be the first company to export medical cannabis to the U.S. for clinical trials. And Mad Money's Jim Cramer just spoke to the CEO moments ago about all of the M&A rumors circulating about the company. Take a listen.
I think all the alcohol companies need to enter this industry. It's a great hedge for them, or whether you're an alcohol company or an investor in an alcohol company. It's a global opportunity. Our intent is to build a company that dominates part of this $150 billion industry. I think you'll see multiple $100 billion companies. We don't want to partner with ABI. We want to build ABI.
Been a meteoric rise for Tilray, as you know, up more than 800%. Since the IPO back in July, it now has a market cap of $14.4 billion, bigger than 140 companies in the S&P 500. Despite all that hype, the company only has $28 million in sales. Now, by the way, the company has 21 million publicly traded shares. It traded 19 million today alone. Well, what do you do with this?
Well, it's really tough. And on this show, you've seen me when the stock was overpriced at 30 say, hey, it's a little pricey here, but it's the only U.S. play. It's the first U.S. IPO. You know, there's maybe cheaper names. And you've seen me say at $100, hey, really expensive here. I'm not sure what to do, but I would not be buying the stock. We're now at close to $150. What happened today? Well, bottom line is that the FDA has come in and said that one of the main U.S. players, they're obviously very well situated in Canada, but they are someone that has U.S. positioning, significant U.S. positioning, can import medical cannabis. They're going to be researching it at UCSD. They're going to be able to make more progress on the research side. This is a day after we get Coca-Cola coming in here and talking about non-medical uses for CBD in their products at some point. So think about what's going on here. And he talked about 150 billion. I mean, that's impressive annually.
Yeah, we have the madman himself with us, Jim Cramer, is joining us. Hey, Jimmy, it sounds like a great interview, but what do you do with a stock that's gone up as much as this one has when you compare it to some of the company's fundamentals?
Well, look, I will say, and it's great to talk to Tim. I saw him at the Green Market Report Conference last week, too. There is, I think, a $500 billion opportunity here, and there's really only about $40 billion worth of market cap of the major the marijuana or cannabis stocks. However, I did everything but just get on my knees and beg Brennan to be able to issue stock here, because he's got to compete against the $5 billion war chest that Canopy has because of their exposure to Constellation. I know he says he wants to be the next Bud, but the thing that's smart is you're going to need a tremendous amount of capital to do medicine, to do beverages, to do edibles, to do pet food health, pet health. All of these things they want to do. That requires a lot of money. So, Scotty, I got to tell you, they should raise it when the money, when the court is high, and he just wasn't biting.
And you don't think there's too much hype, speculative money just plowing into these names, and that someone's going to get hurt on the other side?
No, there's someone definitely will. But against that is the fact that Canopy was a company that when I first started talking about when Rob Sands came on, he made that big investment Constellation. And he said, Jim, you're ignoring how big this market is. Now, there's a lot of retail money in this stock, and it's a very difficult to borrow stock. And I think, as Tim and I know, that it was a really big news today that maybe the government is getting a little bit softer on medical. But I've got to tell you, if you're buying it up here, you better have more of a thesis than just that the quarter is going to be good, because I think October 17th is not going to be nearly as much of a watershed. That's repeal day of prohibition in Canada. And Scott, I think that these stocks are going to come down hard after October 17th.
Yeah, interesting. Jim, Guy has a question for you.
I got a question for you, JC. Carson Wentz back in the fold. What is that? What are you thinking about that? What happens to Nick Foles now, man?
Well, Ron Jaworski was just tweeting something about how Foles, they've got to, we're 28th in short pass, 28th in passing right now, which is, I think, will change when Carson comes in, but we got to give him some weapons. And we haven't been giving, we do not have a receiving core that's anything like what we had last year in the Super Bowl. So I'm nervous, call me nervous, I'll be there. Frank Reich's going to be coming. He's an unbelievable coach. He was our great offensive coordinator from the Colts. And I'm nervous. What did I say? I'm nervous. I love our Birds, but I'm nervous. And I'd be nervous if I started buying Tilray tomorrow morning.
Yeah. Timmy has a question for you, Jimmy.
Real quick, Jimmy, you've interviewed a lot of these CEOs. What's the common thread with these guys? They're young, they're entrepreneurial. What else?
I think that they genuinely believe in the power of cannabis to stop opiates. They believe in the power of cannabis to be able to make it so that we are safer from violence at home, because alcohol is such a big part of that. I think they believe in cannabis as a way to be able to have less drunk driving. But most importantly, I think they believe in cannabis because it's a heck of a lot healthier than everything else we put in our bodies.
Yeah. Jimmy, good stuff. We can't wait for the interview. Thanks for being with us.
I'm so glad you had me on. I think the interview is pretty groundbreaking.
Yeah, we're glad as well. There's Brendan Kennedy. Jim sitting down with him exclusively. You can catch the interview in about 15 to 20 minutes or so. Stay tuned for Mad Money, top of the hour. Coming up here next is the FANG trade two-faced. There's a divergence happening in the popular tech trade that might surprise you. Got those details ahead. Plus, check out this chart. Financials, they're flat this year, so would you believe Wall Street pay just hit its highest levels since the crisis? What is going on at the big banks? We'll discuss much more. Fast Money is after this break. Welcome back to Fast Money. It's the two faces of FANG, Facebook and Google falling over the past month, while Amazon and Netflix, well, they're up. So in this great FANG divergence, do you bet on the winners or do you bet on the losers?
I think you have to bet on the winners at this point. You have a day of reckoning for a lot of these social media stocks coming at the end of September, where you have Jeff Sessions is getting educated on it, he's getting briefed on it, and we're going to see what type of bite DC is going to try to enact against a lot of these social names. I think it will probably be a buy the news event or buy the fact event, because I don't think much is really going to change. But I would say that they're still going to be outperformed by the winners in the space.
I tell you, first of all, people think I'm short Facebook because I've been very negative on some of the approach they've taken to how they've talked about their security and the costs and the risk to their business. I own Facebook and a handful of accounts, but bottom line for me is that is not a name to go with. And Google, I think, also has regulatory risk ahead of it. So I can't touch Netflix because I don't believe in that business model. I believe in the business model. I don't believe in the valuation. And Amazon, yes, I think you have to ride that because even though they have regulatory,
you have no problem with the Amazon valuation, but you have a problem with the Netflix valuation.
Because I think Amazon has a moat. I think Netflix has so much competition around them that I think it's just a matter of time.
I thought Facebook was going to rally off the Zuckerberg testimony back in March, April, and it went from 155 to 205. But it's basically given it all back, and I think it's exactly where it should be. So I think Facebook gets interesting again at this 155 level, where it basically spent a lot of March and April. So I do think you can buy Facebook down another $5.
You guys really think more regulation is coming back big time Facebook's way?
Well, you know what I think? It's
Google?
not going to get easier for them, right? So if you're looking at these four stocks, you say, who has the most risk over the next quarter or so? To me, it's Facebook and Google. Facebook more than Google. And I'd rather, if I'm going to split these, I'd rather go Netflix and Amazon in this one. I think they have the less risk. You go with the momentum, winner, chicken dinner.
You think tech sort of regains its momentum as a group, in which case, maybe not Facebook. Facebook's a special situation right now, but that, most of these names really start getting...
Where else are you going to get this explosive growth? So BK earlier said about Apple, Accent Utility, it's still up 30%, and that's one of the low flyers. All these other names are up 50, 60, 70, 80%. You don't get that anywhere else in this market. You have to go back to tech.
Yeah. You think that's what's going to happen?
Well, and that's why I stick with the winners. That's why I stick with the momentum, because these stocks have been used as an ATM sometimes. We've seen that multiple times, and they bounce back. So I want to go with the ones that didn't really sell off as much this time and have less headwinds over the next quarter.
All right, coming up, more money, more problems. Salaries of Wall Street's big bankers are soaring. Their stocks, though, are sinking, and some traders are betting on an even bigger breakdown ahead. We'll discuss that next. We are live in Times Square, right there at the NASDAQ market site. There's more fast money ahead. Do not go anywhere. Welcome back to Fast Money. Wall Street's paying well nowadays, but not if you're an investor in the biggest bank names. Bob Pisani breaking it down at the New York Stock Exchange for us tonight. Bob?
Good evening, Scotty. Salaries on Wall Street rose last year to their highest level since the 2008 financial crisis. That's according to a report issued Monday by New York State Comptroller Thomas DiNapoli. The report puts the average salary in New York City's security industry in 2017, $422,500. That's a 13% increase over the year before. And by the way, it's the third highest average on record after adjusting for inflation. Now, that's pretty close to the overall rise in profits. Profits for the first half of 2018 stand at $13.7 billion, 11% higher than the same period last year. Now, the reason profits are up is that revenues grew faster than expenses, up 8.6% in the first half of 2018. Revenue growth was especially strong in wealth management, up 14%. Revenue from trading was up 22%. That's a surprise. Now, this is the good news. The bad news is Wall Street's a lot smaller now. You know, the workforce is 6% lower than it was at its 2007 peak. So here's a little more bad news. Even though the profits are up, investing in the big investment banks have not been winners this year. The S&P 500 is up nearly 9% this year. Banks, you see, up a measly 1%. Big names like Fifth Third and Citigroup, they're down. And the investment banks are even worse. Look at some of these numbers. Morgan Stanley and Goldman Sachs, both down nearly 10%. Goldman, by the way, saw a 17% decline in trading revenues last quarter. That was due to low volatility and the limits on the ability of Wall Street traders to profit from market bets. It was the worst on the street. That stock is now, by the way, the worst performing Dow component this year. The banks have got bigger problems overall. Put together a flat yield curve, put together loan growth that's mostly flattish and higher deposit costs. And you have investors saying, there's better places to put my money right now. Back to you, Scott.
Yeah, Bob, thank you very much. We'll trade it now. Well, it's interesting that these stocks just can't get you bid.
No, they can't. And they seem to be foretelling another story. And I'm not going to tell you what that story is because I don't know. I think the balance sheets are excellent. I think the earnings profile is actually returned, maybe not to the pre-financial crisis, but I think the valuations are very compelling. And I think higher salaries, by the way, don't mean that suddenly these guys are having gangbuster business. Their businesses have never been more efficient. There's one half the people working at these banks, so paying people who are performing makes sense to me.
The regionals had outperformed the big money center banks recently, but when you look at SunTrust and BB&T, they both guided lower on net interest margins. So that's what's taking the steam out of them. KRE, the regional banking index, is up 5% against an XLF, which is up 1% year to date. You can see that spread actually catch down to those bigger money center banks. These act like utilities. I would stay away from financials.
It's become too easy to avoid these names, Guy, right?
Goldman Sachs is absolutely, there's something going on there. Clearly there's an upheaval. There's a complete change in philosophy. All the J. Aaron trading, fixed income, currency, commodities, people seem to be out of favor. It's moving towards more of a banking fee-based business. There are going to be some growing pains there, and I think the stock is definitely saying that. Citibank, to me, at one time's book value is the most interesting.
Yeah, I mean, growing pains are exactly right, but this is an industry that's going through full disruption. I mean, just look at what JP Morgan's had to do by cutting commission rates because of the Robinhood app and other things like that. Not only blockchain technology coming along, and demographics is driving that disruption. So you look at the millennials, they don't want these big banks. They don't want to do that. They want to go with Amazon and bank with them.
But their profitability, Brian, is extraordinary. Look at you.
I agree, but they keep it on their way. Listen, I've tried it a bunch of times this year. They don't go up. They don't go up.
Okay, all right.
But I mean, you would think, okay, you got a bull market. The S&P is not all that far from a new
all-time
high. You got strong economy.
3% GDP.
Yeah,
and these guys should be
referred
for that. So, but JP Morgan had record profits on high ROE. So that to me is enough to hang in there.
Yeah. All right. Options traders are betting on an even bigger breakdown for one of these struggling bank stocks. Let's go out to San Francisco. Mike Coe's there with the details. Mike.
Yeah, so we were taking a look at Morgan Stanley today, which traded about double the average morning put volume, and that was largely the result of a purchase of 1,500 October 5th weekly 47.46 put spreads. The buyer paid 29 cents for those. So the buyer is making a bearish bet that Morgan Stanley is going to get down to that 46 lower strike sometime within the next 2.5 weeks or so. And that is, of course, going to expire before they report earnings a couple weeks later in October. But the thing I would take a look at here is that I think this is really more of a technical play because the lower strike is essentially targeting the lows that we saw this year earlier in July.
Yeah, who's got something for Mikey on Morgan Stanley, this options play? Maybe that's the best way to do a trade in this space.
Well, or Mike, how about versus a Goldman Sachs? Because again, people have put these two companies in the same basket. So is there a way you might position that trade?
Yeah, I think you could do the same thing in Goldman Sachs. Morgan, of course, is a little bit more about their asset management business, but options are cheap in all of these names, as are the stocks themselves, actually.
Mike, good stuff. Thank you. Mike, go out in San Francisco for more options action. Of course, check out the full show Fridays, 5:30 p.m. Eastern Time. Up next, you know what? Final trades.
Time for final trades. Let's go around the horn. Jim Seymour, your industrial name that has not participated, but it started to bounce. GM. BK.
I still think oil's the big trade here. XOP, you continue with that one.
All right, thank you very much, Steve Grasso.
Kronos, yes, the cannabis space is overextended. Yes, I think that these whole things have run way too far. Kronos.
Yeoman's work in Mel's absence. Thanks for being here.
It's been a privilege and a pleasure.
It has.
I can't even. I felt serious.
Twitter's good now.
My gosh. I took it as all right. Thank you very much. Mad Money with Jim Cramer begins now.
My mission is simple: to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Creating America. I'll be one of my friends that was trying to make some money in my job, not just entertainment, but educate, teach. So call me at 1-800-743-CBC or tweet me at Jim Cramer. Has the stock market totally lost its mind? I mean, when President Trump imposes a 10% tariff on $200 billion worth of Chinese imports, and then China retaliates with tariffs on $60 billion of American exports, and our president effectively scuttles any low-level trade talks, you'd think stocks would go down, right? Wrong. Because the Dow roared 185 points today, S&P gained 0.54, and the NASDAQ folded 0.76%. So is this pure craziness, people? Maybe somebody slipped some cannabis into the water supply on Wall Street? No. This move actually makes sense. And I'm going to tell you why, so you're not confused, not going to give up, not going to walk away. First, while 10% might seem like a pretty steep tariff, until 6:30 p.m. last night, the buzz was that it would be 25%. That is why I was so concerned about it. What's the level? What's the level? In other words, compared to what many people were expecting, it's actually good news. 10% is a shot across the bow. 25% is a howitzer firing for effective Beijing and Shanghai. The investors who are really worried about this trade war view President Trump as unrestrained in his attacks on China. 10%, that's restrained. It gives our two countries plenty of time to talk. The one hitch is that if we don't reach some resolution with China by January, the tariffs will automatically go up to 25%. So it gives them an incentive to make a deal, don't you think? Now, I think the Chinese will come to the negotiating table, even as you had Jack Ma of Alibaba fame, talking about how China can keep this up for the next 20 years. That's what they always said, 60, 50, 2,000 years. But regardless of what happens going forward, what happened last night simply wasn't as bad as many investors were anticipating. So you actually had a reason to buy, not 25, but 10. Hey, and how about this Chinese stock market? I mean, it's been under tremendous pressure, right? Initially, it looked like it would be down at the opening, which sent our futures lower simultaneously. But at the time I woke up at 3 a.m., the Chinese market had come roaring back, plus 1.8%. Moved our futures up too. Why? Pretty simple. There's a lot of chatter at the Communist Party, worried about a trade war-induced economic slowdown, is putting together a stimulus package, not to mention a plunge protection team to keep their stock market going down, but a stimulus package to keep things moving while they try to preserve their stocks and get them to move up. Now, China's going to get less investment from America. Their government needs to make up the difference. Of course, this was also good news for our companies that do lots of business over there. The ones with the most Chinese exposure, and yes, usual list, usual suspects, United Technologies, Caterpillar, Boeing, great thing. Boeing, that is. Which brings me to my third reason. These stocks are constantly being shorted by oh-so-clever hedge funds who keep assuming they just have to, these stocks have to blow up, don't they? I need to point out that many of these fund managers are kind of paranoid. They see systemic risk all over the place where it doesn't exist. Every time a country in Europe struggles with its currency or its banking system or its finances, we're talking Turkey, Greece, and Cyprus, these guys decide it's an opportunity.
All right, guys, logging off here, getting ready to go join our sister Monica on our Discord. Excuse me, her chat for her bill tonight. All right, power and profit to you guys. Uncle Josh and there. I'll be back with you guys tomorrow. Power and profit.
In fact, it's become downright predictable. On day one, the hedge funds aggressively short their most hated stocks right into all this down.